Good morning, everyone, and welcome to ABG's Investor Days for those of you who are also attending through the web. My name is Karl Bokvist. I'm an equity analyst at ABG. To start off the day, we have the pleasure of hosting CTT Systems with CEO Henrik Höjer. So we will start off with an introductory presentation and then, if time permits, follow up with some Q&A. So without further ado, Henrik, thank you for joining us.
Thanks, Carl. Thanks for having us. Also, thanks for coming. Quite a few people here in front of me. I'm happy with that. And also, as we heard, quite a few people online, and welcome to you as well. So I'll start off with presenting the CTT, looking a little bit about financials first, but then spending most of the time on our outlook and how we see the future on the market. Always tricky to see which arrow is in the right way. So if I look at our financials in short, and the rolling 4 I took as an example here, again, the aftermarket is really driving our growth, and it's also helped a little bit by private jet picking up quite a good speed this year. And as you see, our net sales was up 58% if we compare 4 quarters to 4 quarters. Our operating profit up to 100 million. And our EBIT margin increased as well to 38%. Earnings per share was almost 6 crowns, quite a big increase as well, and our operating cash flow around 50 million. If I then jump into the forecast, as you know, if you follow CTT, we forecast one quarter per quarter. And this next quarter, so Q2, we forecast sales on between 75 and 80 million. This is again driven by the aftermarket, where we see it will start picking up again, and I will come back to that. But it's partly offset by OEM decreasing. OEM is decreasing due to we have quite large initial deliveries on the 777X program in the first quarter. We will continue to deliver to the 777X in Q2, but on a far lower level. And then it will actually be a pause for a couple of quarters since Boeing has a production stop during 23. Looking then at the aftermarket, we see that we are increasing a lot. We also had this effect in Q3 and Q4, where our distributors and the airlines stocked up quite a bit. And we then expected Q1 to be far lower than the previous quarter, and then it would start picking up again in Q2, Q3, and Q4. But it actually was over our expectations on the aftermarket. Yes, we see that it was a little bit lower compared to Q3 and Q4, which was exceptional. But it picked up quite a lot, and actually if we compare it without the currency effects, it was larger than Q4. We also see that if we look back to 2019, we're well above that level, and especially if we look at the rolling 4 quarters, we're far above. And this is a lot driven by the high demand for flying. Most of the world is back to where it was, or almost back to where it was before the pandemic. A few regions are still lagging behind, Asia and China, of course, where we see it will start picking up end of this year and actually take the whole 24 to pick up totally. But after this, the growth will be more normal, and it will be linked to the systems that we deliver. And I will come back to that when we talk about the OEM sales. But we should also remember that there is still 90 787s that were produced during the stop at Boeing's facility that has to be delivered now. They have started. I think they're delivered like 30 of these 120. And the rest of the 90 we will deliver this year, next year, and even a little bit into 25. And that's actually a 10% system increase for CTT on the market as well. If we then look at OEM sales, the system sales, which I think will take most of my presentation today. We took this picture actually it's a rolling 4 quarters, and just to compare where we were in 2019 and where we are right now on more or less a record low, and we have a gap of 150 million. And of course, this is a great growth potential for us. So we see that now OEM is rebounding this year. There's a high demand for wide-body aircraft. We saw this year Air India ordering big amounts of aircraft from both Boeing and Airbus. The 2 new Saudi airlines ordered big amounts of aircraft, and also a lot of the smaller airlines ordering a lot of wide bodies. And this demand is really driving both Boeing and Airbus to increase the production rates of their wide bodies. And CTT, as you know, we are on all these new wide-body aircraft. So on the Boeing 787, on the Airbus A350, and also on the 777X that will start delivering in 2025. When we talk about the 787, which is the most important program for CTT, we've been on an extremely low level last year and this year, 1 to 2 aircraft per month. They are now increasing to 3 aircraft per month, and then gradually going up to 5 end of this year. And then Boeing is targeting to be on 10 aircraft per month in the 25-26 time frame. Airbus is also increasing production rates. They've been on 5 so far and trying to get up to 6 this year, and then they target to be on 9 in 2025. And I noticed also, listening to Airbus and Boeing, they're really emphasizing that this is happening now. It's been targets before, but they're stronger in the communication about these rates. And of course, these rates drive our system sales, which also will drive the aftermarket. And this will start closing the gap that we saw on the previous slide. Another important opportunity that we have, and that has been a big part of our sales as well in the past, is the anti-condensation retrofit opportunity, where, as you know, we were on a 0 level last year, of course explained by the pandemic, where nobody was flying for a couple of years, and of course nobody was making any money, and there was no demand for anything. But now we see this market is coming back, of course driven by sustainability, which is key to our whole industry. I think that only thing that everybody talks about is sustainability, and it always starts with sustainability. And of course, the first step is to buy new aircraft, driving the record demand for 737 and A320 family, maybe saving 20-25% due to new engines. But after that, there is no current solutions except for the solution we have, where we can help the airlines save another % on their fuel burn and making them more sustainable and reaching their sustainability targets. Of course, this is also being helped by fuel prices, and also by harder restrictions now coming in with EU demanding that we put in sustainable aviation fuel. And also there will be a change in the emission rights, making the investment in our system even more attractive than before. As I said, the demand has been very low due to the pandemic, but it's starting to come back now, and we have several customers that are very interested in this, and we are in different phases of completing these sales. How fast will it go? That's the key question, and it's really hard for us to see. Some airlines are really making money now, but a lot of them are still in the struggling mode, and it's a little bit difficult to say the timing here. But we're pretty sure that this market will come in again. There is another thing that is affecting the market that we're trying to work around. I was discussing with Carl before here. The demand on flying is still record. This summer is fully sold out, and actually all the airlines are struggling to meet this demand. They don't have the capacity, and that comes to aircraft, crew, MRO resources, and of course, when you come to MRO resources and aircraft, you need that to install our system. So maybe I think the summer will pass by, and then we will be in a better mode having these discussions with our customers. Looking at the other retrofit opportunity, which is the one for cabin humidification, we're still trying to get our first sale on this one. As you know, we were very close before the pandemic. Then, of course, the interest for flying and investing in flying really decreased. But it's now picking up again. All the intercontinental travel is really booming. As I said, the demand for these aircrafts are record high. And we see that the interest is coming back. Also driven by air quality, humidity, wellness, which is important for the passengers. And we see these large retrofit programs coming back, but we also see smaller opportunities, and we can actually come in with our system just on a regular C check or something like that. And this opportunity is, if we can get the market to take this, I mean, it's great. I mean, we have 1,000 Boeing 787 delivered already. They don't have cabin humidification. Their competitors on the A350 have this possibility, and Boeing has the possibility to sell the option on the 777X for cabin humidification as well. So I think the market is starting to create itself, and if we can get it rolling, it's a quite big opportunity. Then the last one that I want to comment is the private jet market. When we look at the private jet market, we have been dominating the VIP segment. So for the really big aircraft, I would say it's a more or less de facto standard. If you buy a very large VIP, you will have our humidification system on board. It's getting there now on the narrow bodies, which of course is a little bit bigger than that market. And we had a low penetration in the past, but it's now clearly increasing. And then the last one is the large business jets, which I will comment all three of them a little bit. So we're still super happy with our partnership with Airbus Corporate Jet. It started off with the ACJ 320 family, where we have made this kit solution. So our system will look exactly the same for every customer. And it's actually not sold by us or the completion center. It's sold by Airbus Corporate Jet. That makes a big difference. And this makes it, of course, more scalable for us as a business. And I would say we're actually a little bit surprised by how much Airbus Corporate Jet is looking into the system, because they really see that this is a differentiator from their competitors, that they have this system to offer for their customers. And it makes a big difference flying this aircraft with our system or not. It then developed into their next big project, and that's the ACJ 220 business jet. It's a very large business jet, but it's marketing the business jet segment. Here we signed the contract with them for promoting our system on eBay a year ago. And we got the first order for the first aircraft in July last year. This system has now been delivered, and it's been being installed in this, at least when the picture was taken, empty aircraft. It's a little bit more full now. And this will enter into service in the second half of 2023. And again, a super good cooperation with ACJ, where they really market our system. And of course, this can be a little bit bigger volumes than the big narrow body ones. It's also leading us into the third opportunity in the VIP segment, and that's the large cabin business jets, which again is a bigger market, 50 to 100 aircraft per year. These aircrafts are relatively new to the market, with which being led by the Bombardier Global 7500. They're designed to fly more than 10 hours. They can fly up to 15, 16, and now they're developing the 8000, which will fly even faster and longer. They're of course equipped for best comfort, and with our humidification system on board, that's what's required to get it really good for these long flights. And it's also, we're learning now that maybe people thought that they would not fly so long on these aircraft, but the customers are actually doing really long flights, which is good for us because it's on the long flights you need the humidification. So we have our system on one aircraft that's been operational now for, I think it's almost 2 years. The second one is coming out just about now, I would say, or maybe in the beginning of Q3. Those have been retrofitted, but of course our target is to get on the OEM so that they are promoted by the OEMs and that the customer can get them installed when they get the delivery of the aircraft for the first time. Bombardier is closely followed by Gulfstream. They're developing their 700 and 800, which will be the same segment. And of course, we're targeting to get on board on Gulfstream as well. If I then try to summarize a little bit, the aftermarket is really strong. It's really robust and it's growing over time. 2023 is the year when we will turn around our system sales, driven of course by the OEMs increasing their production rates. And this will also, as I've explained, grow year over year, and the demand is super strong, and Boeing comments that everything up to 2030 is sold out already. So if you order an aircraft now, you will get it later on. So this is really a strong growth that is happening, and we are very well positioned on these 3 wide-body aircrafts. So I'm quite optimistic about 23. We will increase our sales. We will also improve our market position. We have a compelling offer, and I also hope that we, during the year, can capture some of these strategic growth opportunities that I've been talking about. To do that, I just want to finish off with saying that we're quite active on the market. A couple of weeks ago, we were at Air Cargo Europe. We're trying to address the freighter market with our flight deck humidifiers. And of course, this is a new market and we're trying to educate it. Right now, the private jet exhibition in Geneva is ongoing, and we are of course there as well at eBay. Again, doing big promotions with Airbus. And in the beginning of June, we will go down to the biggest aircraft interior exhibition together with Collins Aerospace, which is of course a very important partner for us in this marketing. So quite a busy spring leading up to the summer, and with that I hand over to you, Carl.
Thank you, Henrik. So the first one on the system sales and your comments there on the production rates that are going up, but can you tell us anything about the selection rates and if you've seen any progress on the areas where you don't have full selection rates?
So I mean, commenting on 787, which is the biggest, and is quite easy. We've been very high on selection rates. We actually talk about more than 90% of every 787 produced having our systems on board, and that is for the aircraft that are meant for long haul. There is a few aircraft that are used for shorter distances, and then our system doesn't make sense. Also on the crew rest area, the selection rate is extremely high, and usually the airlines select crew rest when they have a long haul aircraft. So then we can have up to 3 systems on a 787. We're increasing our effort on the 787 together with Boeing, and they have expressed an interest on actually in the future having cabin humidification as well, and this is of course driven by they see Airbus A350 have it, and 777X will have it as well. So hopefully we can get it into the cabin in a not too distant future, but it's not happening this year or next year, but at least we're having those very fruitful discussions. Then on the A350, the selection rate has been lower historically. In the beginning it was very low, and now it's really picking up, but we're not close to the levels where we are with 787, and that's really a target for us to work with Airbus and work with the airlines that select the A350 to get the selection rate up for all sections, flight deck, the 2 crew rests, and also you can humidify up to 3 zones in the premium cabins on an A350. So it's a great potential, but we're not really where we want to be on the A350. And on a 777X, it may be a little bit too early. We have some of the customers that get the first deliveries in 2025. There's plenty of time to work on selection rates and the airlines that have ordered 777X, and that's what we're doing right now, but I cannot really give you a number there.
And then one thing that was mentioned about a quarter ago was this kind of a bit of cautionary remarks about the inventory adjustments, and also that you saw a threat from a copycat in the US. This last quarterly report, you still grew aftermarket sales, and you didn't really highlight the copycat. So I would assume that you feel pretty confident about your ability to manage that competitive threat.
So that was two questions in one. I'll start with the first one. So the inventory levels, that was clear, and of course we had, which was good for us. We had the chance to raise our prices for the year of 23, and as you all know, there's some inflation, and we were actually compensated for that. And of course, that led to the airlines and our distributor to stock up a little bit on the 2022 prices. It also was done on consumables, lower sales in Q1, but the rest of the aftermarket, meaning repairs and spares, really compensated for that. And now in Q2, we see that this is gradually fading off, and this stock is getting quite low actually. So it's looking really good, and it's going faster than our prediction. On the copy, we're still confident. We see that this is a copy using a material not intended for aviation. We spent years together with Munters to develop our material, and I think we're quite good on fighting this off when we explain the differences to the airlines. So again, a little bit worried end of last year, but now quite confident that we can defend our market and we don't see any effects of it.
And the final question, now when you are entering a post-pandemic era, everything seems to grow, and but your balance sheet is very, very strong. You have a financial policy of paying out 70% of earnings in a dividend, but do you see any kind of larger investments coming up where you need to preserve some extra cash or similar?
I mean, no, I don't see any large investments now. Of course, we keep investing in the market. We keep rehiring people and growing a little bit. And of course, as production grows, we will invest in our manufacturing processes, but we don't have anything really big on the horizon right now.
And with that, I think we can just have time for one more, and then I would just ask you, last year you were close to 40% in operating margins in profitability in certain quarters. You have flagged the mix effect with the consumables and system sales coming back. And I realize you do not have a target, or you do not want to provide a target here, but how do you think one should assess CTT's profitability going forward when system sales pick up, yet you still have this aftermarket business growing?
But I mean, as you said, I will not answer the question, but I mean, we are happy with a little bit lower profit margin, because that means that we sell more systems, and more systems will generate a bigger aftermarket in the end. I think you could actually see a little bit last year and beginning of this year, where last quarter one was lower aftermarket and higher portion of OEM, that affected our margin a little bit. And you see the effect that it has. So if we drop down a little bit further, that would be okay, I would say, but not too much.
And with that, I think it's time to say thank you, Henrik and CTT, and thank you all of you who have been watching and listening.
Thank you all.
Hi and welcome everyone to ABG's Investor Days. My name is Stefan Knutsson. I'm an equity analyst here at ABG, following our next company, which is Flexion Mobile. And with me today on link, I have the CFO, Niklas Koresar. Welcome, Niklas. I leave the floor to you.
Thanks, Stefan, and sorry for not being able to be in person, but I got stuck. I got stuck in London from where I'm presenting. So I'm representing Flexion Mobile. So we are a games marketing company, and what we do is we help basically the biggest game developers to reach revenues outside their two main stores in the mobile space. And that is a space that has become very, very hot. And there are a couple of reasons for that. Is that the developers are struggling with the industry at the moment a little bit because macro numbers are not that favorable. But they're also, in the past, they've been relying very much on being able to buy users, basically through Facebook. And Apple has kind of closed down the ability to track the users you acquire. So you have to do your marketing in blind at the moment. So they are struggling with growth. On the other side, the two dominant stores, Google and Apple, are under a lot of pressure from regulatory reasons. So you have the Digital Markets Act in Europe, and you have all the fights between Epic and, for example, Apple in the US. So the regulatory bodies are now breaking up these big entities, basically opening up for alternative distribution. So when we're now talking to the big developers, and we have always pushed for this market, but in the past it's been relatively small. But now we spoke to one big developers, and they are now saying that their budget for the next 12 or 18 months on Android, which is half the mobile market, their budget is to do 25% of the revenues outside Google, which is kind of unheard of for us, because in the past they were doing 100% in Google and Android, and we had to convince them to generate more revenues. So now they're all talking, oh shit, I need to do 25% of my revenues outside Google. How do I do that? Do I set up 10 different strategies myself, or I do 3 and help, and Flexion can do the rest for us? So there is a lot of interest for what we're doing at the moment. And if we look a bit more in detail on the numbers, if we go for the next slide, Stefan, just a snapshot of where we are. So we generated in the Q1, which released last week, about 60 million pounds, which we are almost on a run rate of $100 million as a company on an annualized basis. We grew by 50%. EBITDA grew more to about 0.7 million pounds, and the cash flow was down this quarter. It's just short-term effects on working capital, but in general, we have a negative working capital, which is where when you grow, your cash increases. So we sit on a very healthy cash balance in the company of 12 million pounds. Next slide, please. So what we do as a company is that, as I said, we are a marketing company for the big game developers around the world. We work in 2 verticals, alternative distribution and influence marketing. I'll come back to what that is. But basically what we do is we help the big developers to grow the revenues. It's very simple. Next slide. We are on the gaming market, which is, of course, is a massive, massive market, $200 billion, where mobile is about half of that. The alternative distribution, as I mentioned, is mobile only, and there we focus on Android at the moment. And influencer marketing, our other service stack, is across everything. So we do, PC and Apple, for example, and console. So it's across the whole market, and that's quite attractive because you can then follow your big customers over into more segments of the market. Next slide, please. So where we are in the value chain, if you look at distribution, where is most of our revenue still, is that when we focus on these big developers around the world, they, as I said, they focus on their 2 markets, which is Google and Apple. And now recently they start to see how they can generate revenues outside. But that market is very fragmented and consists of a lot of very, very big app stores and opportunities, but they're still, for the developer, quite small. So I mentioned here some of the stores we're working with: Amazon, Samsung, Huawei, one store in Korea, and some more new opportunities. But they are representing for us about 10% of Google Play. So that is maybe 4 or 5% of what a developer generates globally. So each of those opportunities one opportunity is not big enough. So you need to combine it into one to make it an attractive offer. And that is what we have managed to crack. And I think we're fair to say we're the only people who can offer this. So we become the third distribution pipe for these developers in the market, and we take care about the rest, I'd say. And then we have this second vertical, which is influencer marketing with audience lead. Next slide, please. So how can Flexion build up this market position on this massive, massive market where we can say we are a world leader on something that today is really, really hot? Because we are still, compared to the developers, we're a very small company. And first of all, I think it's fair to say we were the first to really properly focus on this one. So we've done this now for 10 years, and we were world leading back in the Nokia Ericsson days on this. And thereafter, we just continue to build and build and build for what's happening today. So you're clearly a first mover. And that means that when you slowly build up your tech, your games portfolio and your distribution, it's very hard for someone else to come in, because they're not, even if someone finds our tech, they wouldn't have the games and they wouldn't have the distribution, so they're nothing to offer. So you have to start, you have to build it up slowly, very slowly. And because we've done it, we do create or have very high barriers. It's very hard for others to come in. That also means that our portfolio is the leading portfolio in the world at the moment as a third party. I think I said it before, I looked at it, was a half year ago or whatever it was, that what our games are generating globally, not just for us, but for everyone, I think we're 2 to 3 times all the big mobile games of all publicly listed games companies in Scandinavia. So we are working with a really high-end portfolio, and that means that we're the biggest distributor of games into our stores. So we work very closely with the stores. What is also becoming more and more important here is actually, and that is our tech. And what we do is we can repackage the games for new distribution without the developer having to do anything themselves. And because we have kind of control or access to the games, we can then, when all these new trends are now coming up to the market, when everyone are looking for alternative ways to make money, we can follow the trends really early, because we can justify investments on a very large portfolio of games. And we can also enable the tech relatively easy compared to anyone else. So we're definitely following new trends really quickly. And that is very important now, because the market is opening up. It became wider and more fragmented for every day. And I think it's fair to say Flexion loves fragmentation. We're also now pitching more and more towards the developer with a multi-service offering with influencer marketing and potential new opportunities. So when we go to developers, the offering becomes more and more interesting, which helps us win big contracts. Next slide, please. There are 2 KPIs I think you should follow if you want to track us. And one is how much we make on what we call top tier games. So it's over $140,000 per month per game. And so that's about $1.5 million in Google Play. And we grown the portfolio over a year from 5 to 8 of these really big titles. But what we also managed to do is to grow the average revenue of those games quite a lot. We had a super strong Q2 and Q3 last year. And that is, we were in a really successful initial launch campaigns or some massive games we signed at basically a year and a half ago. So it really drove those revenues. And then the Q4 was also very strong. But in the Q4, we also added one more game, which is not that big. And now when we come into the quite dull Q1, that eighth game is dragging down the numbers a bit. But we're still generating here 40% growth over a year. So Flexion is steaming along. We mentioned in the quarterly report also that we have two drivers for this KPI, which we are quite excited about, to be honest. And that is that we have signed a couple of kind of large mid-sized games where we announced in the quarterly report we've seen some really good traction on the games. And that is because they respond to user acquisition in our channel. So combined with the developer, can really start driving those revenues. And that means that, let's see how big they become, but that, and maybe with a bit of more distribution, when we add now more and more distribution channels, makes them potential top-tier games, which make us not just signing really big games that comes to become big, but we can build mid-sized games and push them up into the top-tier game. So that's a very interesting trend. It's very early. We mentioned that is from March onwards. So that is a trend where it hopefully generates revenue in Q3, Q4 this year. And the other one is that we signed a big portfolio of games, so we extended it earlier this year, and there are two games there that hasn't been launched. And we mentioned here that those two games in the quarterly report are $9 million in revenue in Google Play, where we're supposed to do, say, 10%. That number is now $16 million because one of those games, it was a recently launched game, and that is just shooting off. It goes to the sky at the moment. So let's see where it end up, and let's see how well it responds in our channels. But the potential is growing for every day. So there's two things that is interesting. Those games are not live yet. So again, it's a Q3, Q4 effect for us, hopefully, and beyond. Thanks. Next slide. And the other one is the marginal cost of the company, and especially within the distribution. So we built this platform, and we announced it back in the days for 50 and 50. We spoke about 50 games, spoke about 100 games. So the platform has almost unlimited scalability in itself. But what happened was that back then we couldn't imagine that we would sign these super big titles so early in the company's history. So we imagined that we would have a large portfolio of mid-sized games. But because now we were so successful with big guns, we kind of gone for a slightly bit smaller portfolio, but with much higher revenues. But that means that the scalability is there, and the marginal cost of taking in games is very, very low for us. And if you look at it, the 8 games we have, and there's 2 in ramp up coming in. So you're talking about 90% of the revenues from those games. So the rest of the portfolio, maybe, a smaller game there make $20,000, $30,000, $40,000 per month. And we're still in a process where we can throw out, let's say, $20,000 game, add an $800,000 game, and you have 40 times revenue without any cost at all. And that's the process we're at the moment. I think we also said that we're slowly getting the quality on the mid-sized portfolios getting better. So maybe one day we can start growing up beyond 30, but we are still at this phase where we kind of build up the quality of the portfolio. Next slide, please. We acquired Audiensely where we entered influencer marketing. It's basically a year ago. And that is a market that's become quite hot actually in gaming. And first of all, it's a new way to market your games because Stockholm knows all about it. It's influencers everywhere. It's a very effective way to market a game. You have an influencer who have a very big follower base, and they say, "Oh, play this game, it's great," blah blah, and then you go, the follower base following it. And there we found Audiensely. We spoke to them for over a year before we acquired them. and they are focusing on the big brands, the big game developers like ourselves, and they focus on the kind of high-end influencers, which is primarily on YouTube. And that is it's been very, very happy with this acquisition. The team is great, and the position is very, very strong. In terms of growth, they grew a lot last year, and this year, I think it's fair to say that if you look on their margins they kind of retained very strong margins in the business in the traditionally quite weak Q1 and also Q2, maybe with a little bit lower growth. So they're kind of not destroying their own market by going for growth instead of profitability. So it's more to come. That in terms of EBITDA, we're also building up that entity for especially within sales and a little bit of junior management to kind of enable that company to grow a lot going forward. And it's also here, so with the sales staff, we do in Audiensely, but also in Flexion, and it's all about cross-selling between the two, because they also work with 250 biggest developers, but they're different influencers, developers than us, so it's cross-selling. Next slide, thanks. Yeah, total revenue, I mentioned this. We grew by distribution organically 37%, group basis by over 50%. Q1 is down, is very dull quarter, but it's also based on some really strong numbers in Q2, 3, and 4 last year. We still on a little bit longer term generate a lot of revenues. Those numbers, those games, the potential is still the same as before. We work a lot on adding distribution, so is for us it's just to add distribution and get those games really up and flying again as we are. The potential is there for sure. We guided for 20 to 40% growth over the year, and that is without any massive blockbuster games, and it's without any M&A activities. So yeah, we're working along. We said that we're on track to deliver for that for the year in the quarter report. Next slide. On EBITDA, I mentioned this, marginal cost is low, especially for distribution, but this is including Audiensely, where you see that gross profit is growing more than staff cost, and your EBITDA is shooting up. In Q1, what we've done over the year is here that we're increasing the staff cost. We also reorganized the whole company to be able to enable more M&A. So we built up a proper group function, so we have, group HR, head of HR, group legal, new accounting systems, etc. So we invested a bit in cost here to enable M&A, which I think you can see a little bit in those numbers, but that's short terms, jumps in the numbers. Next slide. We've been IFRS accounting for a long time. We don't capitalize development costs. So we have a very direct relationship between EBITDA and cash flow in the company. But then you have, especially when you acquire companies, you have a lot of intangible write-offs, etc., or not write-offs, but amortization, which affects the number. But this is something you can read on before. I just want to mention we're IFRS. Next one. This is the final slide. So just to summarize, so we're a marketing company for games. We grow revenues and user bases for game developers, for the big game developers around the world. Work in 2 verticals: alternative distribution, which is a market we own and where we are world leaders, full stop. Where we went into influencer marketing, is one of the bigger companies which focus specifically on gaming. And that market, that is something we're looking how we can make them one of the real world leaders in that one. We're working on that. And then we're looking into if we should enter a 3rd vertical. And it's what we're looking for is highly strategical. Something, if we can go to the other slide, it's okay, I don't know. It's highly strategical. So we're not going to do any roll-up strategy. And it's what we're looking for is specifically sales synergies between the verticals. And it's niche markets, what I call kind of cool, small niche markets on a massive market, on a $100 billion market or a $200 billion market, where we have the opportunity to become world leaders. So yeah, that is what we focus on. our market is happening at the moment, and yeah, it's super exciting. So thank you.
Thank you, Niklas. I have a question here regarding a slide you showed earlier, and it's regarding your scalability within distribution, where you don't need to add as much cost when you add new games.
Yeah.
With that in mind, I guess it makes a lot of sense to broadening your portfolio. What will be needed from your side to, say, reach 20 top-tier games in a few years' time?
I think what's happening now is that we see, we mentioned it in the quarterly report, we see more and more inbound questions on what we're doing. And so basically, as I started by saying that the big developers are now looking at, they have budgets or target forecasts for budgets for reaching the market outside Google on Android. And for them to do it all by themselves from scratch is quite a big ask. So it's quite, I think it's fair to say that a lot of them are, oh shit, we spoke to those Flexion, let's reactivate those discussions and see what they can offer. We're engaged in more and more discussions. Some of them may go themselves, for sure. That's how the market works. But there are coming up with more and more opportunities. The other big driver for us, which I think had the opportunity to attract more and more developers, is that because the market is opening up and Google and Apple can't kind of protect their market as they've done in the past, if you say it in a nicely way, there is more and more distribution opportunities coming. So we signed quite a strategic partnership with Digital Turbine. They have 100 million kind of users in the US, and they need to populate dedicated store for mobile operators, and we're going to help them with that. So that's another way we add distribution, and the more distribution you have, the higher your numbers become when you pitch to these really big developers. So that also attracts more. So it's definitely within grasps for us to get that number of developers for sure, or a number of games, without a doubt.
And how large would you say that your universe of games that you deem to be top tier eligible for you would be?
We talk about 250 developers, but if you look at, we say that the top tier is $1.5 million in Google Play, but the market is growing all the time. So is it 300, 400 games at the moment? I haven't looked for some time, but every time I look, it's more and more games are in that region. So it's what we look at is how much they make in Google Play as approximation, and I think it's 300 to 400 games that are there now. So it's growing all the time, and it's also renewing itself when new games are coming up and new successful developers. So the opportunity is big enough for us. You mentioned 20 and it's 300. It's not. Yeah, that's not a problem.
Yep. You also mentioned the 2 blockbuster titles that you signed in March. How excited are you about their potential? And would you say that the launch is imminent, or will it take some more time?
As I said before, I hope the launch is today, but it's not. It's, of course, both for us, we also haven't paid the developer the additional fee. So let's see when we can get those live. Of course, it's very important for us to get them live, and we work very hard on it. But it's I get more and more excited every day, because one of those games were in kind of soft launch, or have been a soft launch for a long time, and they released it 2 months ago, and it's going through the roof. Every time I look at it, the numbers are higher in Google Play. That doesn't mean it's not a perfect correlation to our market, but let's see. The opportunity is getting bigger and bigger for every day. So let's see there. It takes a little bit of time. You need to get them live. It takes a little bit of time to get them up. But what we saw last year was that those really big titles, they actually generated revenues quite early in the cycles, in their initial launch phases. But let's say they're not live yet. But we're definitely trying to get them live ASAP.
Yeah. We have talked a lot about increasing your portfolio of games, but you can also increase revenues by increasing your distribution power. Where do you see the largest potential between those two? We
said it's a kind of normal cycle. First you build your tech, then you fill it up with products, and then you increase, get more and more customers to buy it. And I think we are in that third phase now where, and it's all about, it's coming a lot from the regulatory pressure on Google and Apple, so they can't be a bit nasty anymore. So everyone are now exploring the opportunities that they have been a little bit afraid of maybe doing in the past. So it's coming more and more and more. So that's the beauty here. We can still add more and more games, but our focus is distribution, which have an indirect effect that you hopefully get more games. So it's kind of two-dimensional growth here. And also the existing portfolio is so big. We generate 4% of total revenues. Why shouldn't that be 10, 20%? So existing games we can grow, new games we can grow, and it is actually quite exciting at the moment.
Perfect, Niklas. By that, I would like to thank you coming and presenting with us here today.
Thank you so much. Thanks, everyone.
Welcome back to ABG Investor Days. Next up, we have Stefan Wikstrand from G5 Entertainment. With no further ado, Stefan, I leave the floor to you.
Thank you very much. So my name is Stefan Wikstrand. I'm the CFO of G5 Entertainment. Let's see if I pressed right. Oh, there we go. G5 Entertainment. We're a developer and publisher of free-to-play games for primarily mobile devices, but also for PCs. So we have a relatively significant market on Windows, but also through our own direct-to-consumer G5 store. So we're serving the market of mobile games, which is a bit over $90 billion US. So quite a sizable market. We serve that through 11 offices that we have. Since the last time I was here, we've added quite a few, but I will get back to that in just a bit. We have a very strong history in creating games. Our two biggest successes, Secret Society and Hidden City, have generated very high revenues over their lifetime. Also, obviously then, very profitable as well for us. We focus on a female audience of women over 35, which is a bit of a unique target audience for mobile games, especially with such a focused portfolio that we have. The company has been around for more than 20 years, so we celebrated our 20-year anniversary in 2021. We listed in Stockholm in 2006, and then on Nasdaq 2014. So these are our current operating locations. So before we had a very, very slim and very focused geographical footprint. So we had the office here in Sweden. We have a small marketing office in San Francisco, and we have an office in Malta that runs development and parts of publishing. And then we had our development workforce in Russia and Ukraine. That has obviously been a bit challenging the last year. Therefore, we've made some changes to that. So we've relocated quite a lot of staff specifically from Russia, but also from Ukraine, and established quite a lot more offices. So now, in addition to the 5 that we had before, we have the biggest one of the new ones is in Montenegro. Georgia, Armenia, also quite sizable. We also opened offices in Bulgaria, Kazakhstan, and Cyprus, where we have quite a few people in each office, but a bit smaller than the other 3. We also opened an office in Poland, which we now are in the process of closing. We realized that it was a bit higher cost base there than we kind of appreciated. So we've restructured that a bit, so we still have staff working out of Poland, but then they work remote instead of being employed by the Polish entity. So that's the new structure that we have since last year. If I press the wrong button again. So if we then just do a quick glance on the gaming market. So 2022 saw the first slump in the mobile gaming market since its inception. So a slight decrease in revenue in 2022. That follows after a bit higher revenue during the pandemic. So if you look at 2020 and 2021, or rather from 19 to 2022, you can see the trend is certainly upwards, but you see that 2020 and 21 are a bit elevated, and then we've come down a bit in 2022. But we've been kind of following the underlying growth trajectory of the overall market over these years, just a bit up quicker and then falling down a bit. But the market is still a growth market, and we expect the market to grow 3-4% annually in the coming years and grow to $103 billion US. I saw on a previous presentation here that the total market numbers vary a bit, and that depends a bit on the source you use. But I think the trends and the growth that you see are more or less the same. It's a bit how you measure the market, and that varies in such a relatively young market that we're in. So continue to see an increase in gamers worldwide. That will continue as well. Asia remains the biggest market in the world, whilst G5, we have our biggest market in the US. And we've always been strongest in North America in terms of geographical footprint. So just a few words on G5's development over the last years. So this is the more recent history from 2014 when we listed on or moved up to Nasdaq. I think the first years, we had amazing growth with Secret Site, The Hidden City. In 17 and 18, we started investing more in our own development. We've always done own development and publishing. Those are the two kind of legs that the business stand on. But in 17 and 18, we focused even more on our own development, and we've released quite a few games on the back of those investments since. So you can see 19, 20, 21 that it's 5 and 8 and 5, which is quite a lot. More recently then in 2022, as I mentioned, we've opened new offices due to the war in Ukraine. And that has obviously been challenging for various reasons. In 2022, we also saw our own direct-to-consumer G5 store really starting growing more significantly from a very low base before. And in 2022, it started scaling really well. Own games continue to be a very healthy 70% of the revenue on the back of the investments made before. Yeah, that's about it on the recent history. If we then move on to one change that we did last year, which also is a part of changes that we made the last year, is the new games development funnel, which we communicated in the third quarter of last year, where we've done some changes to how we develop and primarily launch games in the market. So we've had this slide before. I would say that from scaling and onwards, it's more or less the same, but we did some changes in the game idea and the early development and soft launch stages. As I said, that we communicated in the third quarter. So in its core, we more or less do the same, but we do more in the game idea stage here. We do more extensive marketing tests to weed out the best ideas that we want to take into some sort of production. The early development and soft launch phase is more or less in line with what we had before. The main difference here is that instead of going through the early development and soft launch and taking the game to a wide or almost all market in the world and kind of iterating the game there, nowadays we release it in limited test markets. We test the game very thoroughly so that it meets both internal and external benchmarks for being a competitive product in the market, because we want to give the games that we launch globally the best chance of success possible. So instead of taking all the games to a global launch, we instead test them more significantly, and if they don't meet the criteria, we cancel them instead of launching them to a global market. So test market instead of global launch. But apart from that, it's more or less the same, the steps that we go through, but we're just more hard on ourselves or hard on the games that we produce to make sure that when we release a game globally, we give it its best shot possible, and that all resources that we have available internally can focus on those launches instead of being spread out on too many games. So we, as before, we expect to do roughly 5 to 6 games in soft launch. But then we will cancel quite a few of those, and we intend to have 1 to 2 games to be released to global audience per year. That is the aim. And then when that is done, we kind of slot into how it was before. So then you scale the game with marketing, you work with user acquisition, you grow the game to its peak revenue, and you optimize from there. In the end, the game matures, and then you get into the harvest mode or long tail revenue, which is very long and often underappreciated in mobile gaming. But the games there is very, very profitable. And you can see that the revenue is the red line, user acquisition is the dotted line. And you can see the user acquisition meaning direct marketing, so we get users into the game. And you can see that gap widening, meaning that the profitability of the game is also increasing in the later stage of its lifetime. So moving on a bit to the target audience. So as I mentioned, we have a target audience of women over 35. It is a growing demographic, it's very strong, they pay really well in the games. and they're very loyal to the game, so they play the games for a very long period of time. We have our core kind of genres that we continue to work with. Hidden object games, which is a very distinct genre where we're one of the market leaders. Match 3, a much bigger market, also bigger audience, so better potential, but also more competitive than the hidden object space. We continue with our Mahjong and solitaire games, which we have in the portfolio, which has a we call these games often kind of evergreen games. People that enjoy them play them for a very, very long period of time. And then we experiment regularly with new genres and try to get a foothold there. Here you have 2 examples with a merge game and a word game. All of this is built together with our social network, the G5 Friends network, which allows the players to befriend each other in the game, create a more social gaming experience. They can play with friends, they can help each other forward, they can gift in-game items to each other. But it also allows the gamers to play cross-device, so they can move from playing on a phone on the way home, play on the PC, moving between the G5 store where they can purchase goods directly from us, or take them with them on their phone and mix and match however they want to have that work. So we work with a portfolio of games, as I given that we have multiple genres. That has always been the strategy of the company, to have a portfolio of games. You never know which ones are going to be a huge success or which ones are going to be kind of healthy and profitable, and some we will cancel, as I mentioned on the development cycle. So we built up the new generation of games revenue, the red bar in the bottom there, over the last years on the back of the investments we made in the workforce. Licensed games, on the other hand, have been shrinking the last years after Hidden City reached its peak in 2018, but that game, or the portfolio of games in the licensed category, of which Hidden City is the biggest, has now stabilized the last quarters, so that's good. And you can see there on the percent of own games share of revenue that it's stabilized as well, because previously we had a mixed effect there of the licensed games shrinking and the own games growing. So of course you had a very aggressive growth on the percentage of own games share of revenue. We continue to launch games here. We have balanced and diversified portfolio. We have a licensed game coming out, so we still have licensed as a part of the strategy. But as I said, core focus is still on the own games, which is the part that has been the growing part the last few years. And then if we move on to the G5 store that I mentioned before. So G5 store is our own store, kind of indicated in the name that it's our own. It's our own direct-to-consumer channel. So we acquire users directly to the G5 store, where they, through the launcher, they can download and play all of our games. Previously, it is still primarily the main part of the revenue is coming from Windows, which is the first part of the G5 store that we launched. But since then, we have also launched it for Mac and also for Android, which allows for side loading. For iPhone, it is not possible with side loading yet, so there we can't have the G5 store operational. But if that would change, we would obviously gladly launch it for Apple device or for iOS devices as well. But for Mac, it exists. We've seen very strong growth in the G5 store. It's relatively new. I think it was released late 2020 in early stage, but you can see that we've had very significant growth, especially from Q3 up until today. And the store continues to grow as well into Q2, so it looks really strong for the remainder of the year. One big difference here is obviously that as it is our own store, whilst in Apple App Store, they charge us 30% in commission on all the revenue that we generate in the games. With G5 Store, we control the payment and the kind of publishing part of the business, and the fees are thereby much lower. So the payment processing is in low single digits compared to the 30% that we pay to Apple. There are some additional costs involved in running your own store, like VAT handling, technical support, obviously building it, etc. But it's still a much more profitable store than Apple and Google, for example, on the same revenue base. So yeah, it continues to hit kind of all-time high revenues, much better margins, and then that obviously translates into growing gross margins, and that flows through to the EBIT margin as well. So we're quite excited to see what we can make out of a G5 store in the coming year or two. If it continues to grow like this, we have peers where they have 25% of their revenue coming from their own stores, and we don't see why we couldn't reach that as well. So yeah, an area where we're quite excited currently. So then if we just take a brief look at the financials. I wouldn't be a CFO if I came without numbers. So revenue, 345 million in the last quarter. It was up 4% year over year. Underlying though in USD terms, it was a decline of 7%. So obviously the SEK USD rate has changed quite a bit, and we have our revenue primarily in USD. So that impacts revenue positively in the quarterly comparison. But those minus 7% roughly translates into market performance. So the overall market shrank around those levels as well in Q1. So we perform roughly in line with market. Obviously, you always want to see even better performance, but given that we have the portfolio that we have, the mix of that, we're quite pleased with the result. We continue to see kind of good results out of Sherlock, which is our kind of main game that is growing, which is one of our own games. But one thing that we particularly proud of is the very stable and very strong monthly average gross revenue per paying user, which is how much in mobile gaming, a large part of the audience, they never pay. A sliver pay every month, and how much they pay every month is what we measure here. So the average pay per paying user, not per user. But it's still a very stable and strong 61.8 USD per month. Continues to be high. And we've seen a very strong growth trend there in the last years with the better portfolio of games that we have, etc. But given the softness in the market and that we have some negative macro trends impacting all the businesses in the world, we're quite pleased to see that this number continues to be very strong and stable. If we then move on to the operating profit, almost 40 billion SEK, you see quite a bit of a decline compared to the 53 we had last year. This is in large due to what I talked about before regarding the development, the change that we made in the development funnel. So that as we cancel more games early on, that means that we also capitalize less. So we can't capitalize on games that we don't know if we're going to launch or not. So if we look down here on the cash flow box there, you can see the capitalization impact on cash flow was 28 million, whilst last year it was 43. So we capitalized 15 million less of our costs, and that obviously has a negative impact on the EBIT margin or the EBIT. If we look, we also have a higher resource base. So if we look at if we would have capitalized the exact same ratio of the costs as we did last year, we would have capitalized an additional 20 million this year. So a lot of impacts, a lot of things going on here because the comparison number is as well impacted by some of the expenses we took for the breakout of the war in Ukraine. But still, it indicates something, and that is the main reason for the decline. So user acquisition was a bit lower as well, but the main reason for the lower EBIT is the change in development. Gross margins continue to be good. We end the quarter with a cash flow of 26 million, despite repurchases of 13, repurchases of own shares. And we end with a total cash position of 205 million SEK, which is a very comforting position to be in currently, instead of having a lot of loans on the balance sheet now that interest rates are going up. Oh yeah. Then we have the last slide for today. So just a brief outlook. So, we've started the year with a good momentum. We expect to continue to deliver as we've done the last quarters with very kind of stable results for the remainder of the year. We have a very disciplined approach when it comes to costs, which is also very much a part of the company culture, I would say, given that I've been around for a few years. So in Q1, we optimized the staff a bit. So we reduced the staff slightly, partly due to the change in development, where we require a bit less staff. Also here, we're looking in for this year, obviously with all the talk of AI, there are certainly tools there that are very beneficial for a gaming company like ours, which might also generate some cost decreases. That could be localization to multiple languages. It could be generating, we have a lot of content in our games that could be generated through machines instead of having people drawing it. So a lot of work there. Also, given that last year was quite hectic due to the war, there are certainly optimizations that we can work with going forward as well. G5 Store, we expect that to continue to grow. That will help the growth of the business. It will also improve the gross margin and the profitability. In terms of portfolio, we remain on track with what we've kind of outlined to get 5 to 6 games to soft launch during the year and get 1 or 2 ready for a global release. And we reiterate our kind of UA guidance that we've had for the majority of the quarters the last years, that user acquisition spend will be in the 17 to 22% range. And yeah, as I said before, strong balance sheet and a very healthy cash position for the year. And that also allows us as well to pay a dividend if the AGM then approves the proposal that we have for the upcoming AGM. So that's coming now in June. I think that was it for me.
Great. Thank you, Stefan. So a couple of questions from me. I think first, could you maybe elaborate a bit more on the side loading? And I think it's important to stress that, and also, to explain more what it means and what could happen with, for example, the EU's Digital Markets Act, how that could impact your G5 Store penetration over a couple of years.
Yeah, but it is, mobile gaming has been a bit of a strange market in that sense, that you have a few very big players, primarily Apple and Google, but then the others have followed that have more or less the same offering. They charge you 30% of whatever you make in the store that we pay for the pleasure of being there and selling our goods, or the in-game goods that we have. Microsoft took the first step, lowering their fee to 12%. When they did that, it was obviously not known to us. Then we had already started working on the G5 Store, which is, Windows being the easiest option because there traditionally you download stuff to your computer. However, if you want to download a program from whatever site, you can do that. Nowadays they have the Windows Store where you can download from as well. In the Apple App Store, primarily, that is not possible. You can only download apps from Apple. You can only use their payment mechanism. You can only use their tools, which means that we're stuck with kind of paying the 30%, which is, don't get me wrong, you get a lot from that, especially when you're smaller. But the question is, has the industry probably become so large that the 30% is a bit high, to say it diplomatically? But for Windows, then we launched the G5 Store, started growing. We've done that as well for, as I said, for Mac, for Google Play, because Android allows for side loading. Still, a lot of people use the Google Play Store, but if you want to, you can download the games directly from us. And then payment processing fees comes down, obviously, yeah, and the overall fees come down quite significantly as well. Apple is the biggest platform, or has been the biggest platform for us. It fits really well with our target audience. So, if they would start allowing side loading, even voluntarily or by force by EU or any other body, that would obviously open up a potential market where we would have significantly higher gross margins. I would still expect the majority of people to download directly from the Apple App Store because it's convenient. They know how it works. But still, just taking a sliver of what we make on Apple and doing that through the G5 store has quite significant impact on the gross margin. So, yeah, it is big. Yeah.
And you talked about potentially, why not 25% from G5 store? What could that mean for the group gross margin?
Well, obviously that depends on how the other stores perform. But we already see that the margin potential or the gross margin increases with the growth of the G5 store. Then, I don't want to. It's easy math to do.
Yeah. But potentially 2-3 percentage points long term.
For sure. Yeah. For sure. I would prefer all stores to grow, and then whatever the ratio is, because we make money out of all stores that we operate on, but G5 store is most beneficial. So it has a profound effect on, even from these levels. Just growing a percentage point from Q4, you can see the effect on the gross margin, even though slim. So taking it from 8% of revenue to 25%, yeah, it's money.
Yeah. And a quick last one here before we end. On the capital allocation side, how do you balance, because you do buybacks or have done buybacks, how do you balance between buybacks or investing more in the own pipeline currently?
Well, I think we said the last years that we invest more or less at capacity in the pipeline. We have the teams that we need. We staffed that up in over the last years, or primarily in then 17, 18, 19, but we've increased a bit since then as well, in line with some of the games starting to perform. In terms of new development teams, they're fully staffed and they have the resources that they need, and they get the resources that they request if they show promise. User acquisition, the same. It's a constant dialogue with the marketing team, setting the budgets, but essentially, we try to invest. Obviously you don't throw away money, but in a smart and clever way at more or less capacity. And if they see strong growth possibilities, of course, we can allocate more funds to them as well. And then, we're still quite profitable. We have a very strong cash flow. We have a dividend that slowly but surely is increasing. And then we see repurchases as a kind of very good complement to that. And we've done that, I would say, quite good, effectively over the last years. So yeah, I would say we invest what we can in the business. Gaming is, you need to churn out the games, give them their best shot and test new ideas, and then some will pop up and be very successful, and some you will cancel. So and user acquisition get what they get, and then yeah, what to do but to give the money back to the investors.
Yeah. So more of the same.
Yeah, more of the same.
All right.
That's how we roll.
Thank you, Stefan, and thank you, the audience, both here and online. See you.
Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kalinowski, and I'm an equity research analyst here at ABG. With us today, we have Patrik Settlin, CEO of Lithium. The idea is that he will present his company to us for about 20 minutes, and then we will have an opportunity for a brief Q&A for about 5 minutes. And with that said, the floor is yours, Patrik.
Thank you. Hi everyone, and hi everyone out there in the stream. Where's the camera? There it is. All right. Like Nikola said, I'm Patrik. I'm the CEO of Lithium since 3 years back. Prior to joining Lithium, I have a long background in e-commerce. On the merchant side, I've been in some leading companies in the Nordics, like CDON and Komplett and in Warehouse. And just before I joined Lithium, I was at Visma, so I was part of building a huge software company. Now I get to do both, so it's perfect for a guy like me to help others be great at e-commerce while I'm building a software company in Lithium. So I'm here to tell you a little bit more about Lithium, of course, what we do, where we're at the moment, a little bit about the target market and the trends in the market, and also a few highlights from Q1, and then round it off with a look ahead to talk a little about the business resilience and the growth potential in the business. So let's go. So Lithium, what is it that we do? This is a bit of a talky slide. I got some visuals on the right-hand side there for you. But we are a tech company. We're in the e-commerce space. The product that we're building a software product, a platform, Lithium Commerce Cloud, which is used for advanced digital sales. The platform itself is like modular in its build-up, so you can use it in parts or use it as a whole, as a suite when you run your business. The flexibility of it all is essentially like a toolbox. So you use the parts that you need to run your digital sales. It's not for everyone. We're not Shopify. It's not for the simple needs or what we think is simple needs in digital sales. You got tens of thousands of products or hundreds of thousands of products. You want to sell that to millions of customers out there all over the world, or you want to sell it to really advanced customers, like in B2B buying organizations, where it's like 5 to 10 different stakeholders involved in the buying process, or you got really advanced products like machinery and configurables and stuff like that. So it's more for more advanced needs, and you've probably been doing this for a while. We say that our target market is product selling companies for, say, the turnover is like 50 million up to 5 billion SEK in that range. Not that the platform itself got no limitations, but that's more of a commercial sweet spot for us. So, and since you've been doing this for a while, you probably also got a pretty advanced tech stack on the other side. Like you might be underdeveloped in your digital sales, but you probably got an advanced ERP or CRM or material handling, material steering, all those sorts of things in your tech stack. So the complexity of your tech stack really calls for a flexible platform, a really powerful platform, and that's where the Lithium strengths are. So you can our platform is really flexible, so you can use it for pretty much any tech stack out there. It comes like 80% out of the box is ready made. But then it's always customized to the specific business logics and the specific needs of the client companies. And this is done with our partner network. So we got a partner go-to-market model, which makes us also, the product itself is scalable and the business model is scalable. So scalability. And the sole purpose of building this platform is, this is our reason for being, our mission statement. We are here to make our customers outperform their peers in digital commerce. That's what we do. That's what we live and breathe and eat every day. That's what we are here to deliver to our customers. And this value proposition of ours and this combination with the dedication to customer focus has really brought us some success at this point. We're at 200 plus customers growing at a healthy, steady pace, where those clients are selling to 150 plus markets. Many of them are selling to, of course, in Europe, also US, China, all over the world, really. I think the top one on the list is selling to 170 countries, something like that. So the platform itself is used all over the world to sell worldwide. The solution partner network is 40 plus, all real e-com experts. I'm not going to name drop these on you, but if you check out on our website, you can see who those are. It's really really advanced e-commerce IT consultancy firms that know their stuff. And all this together is today sums up, we're selling for a bit more than 2 billion euros through the platform, through the Lithium platform, growing at a healthy pace as well, since our clients, many of them are very successful in their respective market spaces. We're on a SaaS business model, so clients subscribe to the platform. Of course, running a SaaS business, recurring revenue is the main KPI, so we are measuring it by the annual sort of time frame, so annual recurring revenue. We just passed 70 million there. We had a growth rate of 7, which for us is pretty low, but it's also been a pretty slow market at the end of last year, and we got some other things affecting it. But still very solid growth, and we're looking to find that extra sort of leverage in the business. I think it's important enough to note it here that almost all of our all of our revenue is recurring. So if you look at some other companies like us, they might have a lot of consultancy in their revenues, but we don't. We're just pure recurring revenue, pure product. So that's notable. Gross margin, pretty decent. Also, of course, shows the underlying strength of the business model. So there's definitely a good chance of sustainable high profitability down the road in this company. This one, all the numbers, of course, comes from clients. This is our brag slide a little bit, but we are some of the logos, but it also represents pretty much we got the B2B on this side, and we got B2C customers on that side, and everything in between. So from B2B manufacturers on the left, over in business models through wholesale, through brands, to direct to consumers, and really cutting edge business consumer brands there. If you recognize some of the logos, you see there's some really successful companies that we got as customers, which we are really proud of course, but we are really dedicated to give them the best sort of digital tools they can possibly get. On the business-to-business side, for us, in revenue-wise, it's pretty much evenly split, 50-50 between business to consumer, business to business on one side. But lately, or last, say, 1-2 years, the influx of new customers have been mainly on the B2B side. So it's been like a split, like 70% new customers comes from business to business, while 30% is business to consumer. This also has to do with the maturity in the respective market spaces, since B2B is more, in our sense, in our world, more immature to digital sales than the business to consumer brands are. Some of them are even born, like online, like Revolution Race and those likes. But on this side, they've usually been at it for 30, 40, 100 years and are slowly trying to digitalize their go-to-market models. And we dived a bit deeper into this. We run a B2B report every year. So it's our 7th year we did this now. So if you check out on our website, you can find this report on the B2B digital sales. And what this shows, I mean, the main potential of it, how this is 30% of B2B companies are not even selling digital at all. They're not doing anything. They don't even have sales support. They're not even supporting their own sales organizations within sort of digital. 70% are selling in some form digitally, but that's very various forms. So you got this little ramp up there, 1, 2, 3, 4, 5, showing some maturity ladder, and many of B2B companies are really immature in their digital sales models. So that's, of course, to us and the likes in the market, that's also represent a really big potential in the market. Because these companies, what's happening now, it's been happening for a few years now, but there's a lot of pressure from the buying side. So in their markets where they're selling to, the clients or their customers don't really accept buying things in an analog way anymore. And also the top management in the businesses themselves are being swapped out to younger people with totally different reference frames. So it's really starting to increase this wave of digitalization and also digital sales in business to business, which is good for us because that's a sweet spot for us. All right, so in this market, we had a Q1 that was decent. It was a positive start to 2023. Last Last year was at the end of last year was really slow, very much a waiting game in the market. Not a lot of new business made at all. Very hesitant to everything. But we experienced that the buying processes are now starting to move again, and it started in Q1, and it's still the same momentum is there. The main hesitance seems to be a little bit. It's not disappeared for sure. There's a lot of uncertainty left in the market about the future and what's it sort to bring. But it's also for us a very big difference between business to consumer and business to business. We all know this, of course. There's a huge impact on business to consumer players out there. The consumption patterns is totally shifted. We can all see that. Premier goods like TVs, like furniture, like building construction, those are all in digital sales, at least in Nordics, like 40% down in the first part of the year. While more like, of course, food and pharmacy and that sort of things are pretty much even. But B2B is running at a much higher level. So for us in our market, in our target market, we mainly focus on B2B customers at this point. There's definitely business to consumer, business to be made, but there's more momentum in the business to business side of market. Already said this, but our ARR went over 70 million SEK at the growth rate of 7%. This is affected by a change in the price model, a bit technical for most, I guess, but we've changed our price model. So with these days, since 1.5 years back, we do less in fixed subscriptions up front, and we do less of a number there and more variable as so we're connected to whatever the customer sells or whatever, how they use the platform would be a better expression. So pay for usage, which is hurt us a bit short term, but is good for us long term. So. Technical, I'm not sure how deep you're into this, but we are really at a good place when it comes to technology. We just released this new headless architecture in our platform with new APIs, and we're just, I'll get a bit more into that soon, but I don't want to get too technical with you. Profitability-wise, EBITDA over at 0.6, which is we've been on this trend for a while now. Profitability is really high on the agenda, given that both the capital market and the markets overall it's pretty much demanding us to move to profitability. So that's what we're doing now. So in the constant sort of like balancing between growth and profitability is prioritized this year. And we've set the target to be cash flow positive by the end of the year on a monthly basis. So the trend is going like that. So we got a plan, we're executing on it, and we're trending towards it. So I feel pretty confident that we're gonna deliver on this goal. Okay, quick look ahead. Business resilience, first of all, of course, important these days. How solid are we in our business? We are a growth company. We've been that for all of our existence. So we've been a bit in the red and still are in the red, but we're moving pretty fast towards black numbers. So, and that's what we're shooting to do in not that long a time frame. But to be able to do this, of course, the Litium Commerce Cloud, the product, we got a top modern e-commerce platform in the market. It's very attractive both to partners and to clients, which is really, I mean, the sort of foundation for us to build any sort of momentum out there. And a good thing about what we do and the product that we're selling is not just catering to growth. It's also catering to cost efficiency and to be more automated and be able to save money in your respective companies. So regardless of sort of if it's a recession or if it's a good times, we can cater to either growth or to cost efficiency. So of course these days we cater more to cost efficiency. We'll talk more about that in our messaging. The product's got high stickiness. This is the term for it. So I mean, a Litium platform usually takes like 500 to 1,500 hours to install. So when you've done that, when you've customized it to your specific needs, and you're happy with it, there's really no reason to change it. So I mean, sort of, I wouldn't say committed, it's a pretty strong word, but there's commitment to it when you've done it. So if you're happy with it, there's no real reason to change. So the threshold to change is a bit higher than most other software products in the SaaS world. Oh, wrong way. B2B, again, we got a strong position there. Like I said, we got the most of the influx of customers are coming through B2B these days, lately, the latest couple of years. And the trend there, the underlying market is stronger. I mean, the business consumer, of course, is leading the way and when it comes to digital sales. And we got a lot of like really prominent business consumer customers with us, which also is a strength on the business-to-business side, because then they know we know how to do it, right? But the digital transformation trend is stronger in the business side of, and also there's more companies there. There's more manufacturing and distributing companies in Europe than retailers. I think the ratio is like 1 to 3. So there's a lots bigger market and more immature. They are going to do much more in the coming 5 to 10 years. So it's a good spot to be. We got solid financials. We got profitability improving. We're moving towards cash flow profitability. So the money we got, the cash money we got is going to bridge over. So we get to a state of self-sufficient or self-financed growth. So where I'm looking for. That's what we're going for at this point. Growth, scalability enablers. Again, the top modern composable platform that we got in the market. Of course, it's a foundation for all sorts of growth for us, for our customers, for our partners. And the technology is so, I would say, advanced. We're really, for the size of the company we're really leading the way. We're using the latest Microsoft.NET framework. We're using the latest architecture, the latest frameworks for headless. So we're really in the front line of technology, I would say. And it's recently, last couple of years, is really starting to show in the partner community that they are really preferring to work with our products, which is, of course, foundation for growth. This year, we're implementing headless and also what's called serverless cloud. So this means in financial terms, we're going to be able to run the customer environments in a more efficient way. So we'll be able to up our gross margin. We should be able to reach upwards of 73 to 75% when we got this fully implemented in all of the customer population. But also there's more benefit to this because the customers get more dynamic environments, so we don't have to scale in a manual way. It was just automatically scale towards whatever sort of sales peak they got in their businesses. So there's many other perks to this as well, but from a financial standpoint of view, it's also beneficial. The new business model, which is hurting us a bit at the moment since we're migrating a few big customers, but we are very confident that this will help us to grow, especially when we're through the recession part of in the last or in the couple of upcoming years. It should really kick in for us. But already this year we are expecting to see growth numbers ticking up again at Litium. And I got one more slide, but this is the last one on this one at least. B2B, again, very tons of potential in this market. We got a good position. The underlying market is very strong and the digital transformation is ongoing. So this is where we see the main potential for Litium, and this is where we put most of our effort to become even better than we are at the moment by finding more scalability through packaging the platform in more efficient ways. So some key takeaways. Remember this when you think of Litium. We have an attractive e-commerce platform and we've got a scalable business model. The platform is scalable itself and the business model is partner, so it's scalable as well. We've had continuous solid growth on ARR, recurring revenue, with pretty decent gross margin, which shows the potential going forward. And we got solid financials, and we are really well positioned to tap into the B2B potential in our target market. Yeah.
Excellent. Thank you very much for this, Patrik.
Thank you.
With about 5 minutes left, I think we should do a brief Q&A. I think you mentioned this a little bit during your presentation, but how would you describe the business momentum right now? Would you say that it's getting a bit better compared to the second half of 2022, or how would you characterize it?
Yeah, definitely better than the later part of 2022. But it's a bit of a mixed bag, right? We all know that it's a pretty rough ride for business-to-consumer brands out there. But since we are strong on the business-to-business side, the pipelines are healthy. We are getting opportunities over the goal line, so it's a totally different climate since if we look 6 months back, it was like frozen solid, but now it's pretty warm again.
And I mean, one could say that Litium is in a way a growth investment for your clients. Would you say that there is an increased hesitance still from your clients to invest in growth, or would you say that it's, as you've mentioned, not as frozen anymore?
It depends on which client we're talking about, of course. But if we look at B2B or business clients or prospects, they are usually what they're looking for in value, regardless of sort of the financial macro financials. They are looking to mainly increase efficiency internally. That's what the main thing they're looking for. But most of them are pretty surprised how much value they create on the customer side. So they get usually more, very much more happy clients in doing so. And then they hopefully they discover the sort of the power of digital commerce that is really. It brings really both. It brings more growth, more profitability, and happier clients and more efficient companies.
Yeah, it's not always the best thing to save yourself out of a recession, but perhaps to invest sometimes. So.
Yeah. But it's all been done on the consumer side already, so they're starting to really understand how to do it. But it's more advanced in the business to business because the complexity of the products is usually really pretty high compared to selling one sweater to one client. Is much harder to sell a big sort of mining equipment machinery to one client with 10 stakeholders. So it's a different ball game, but the same benefits.
Absolutely. So you mentioned previously that one of the goals is to achieve a cash flow neutral or a cash flow positive position sometime during 23. Would you say that the present environment can help you facilitate that goal, or how would you feel about that?
Yeah, I feel good about that.
Yeah,
we got plans for it. We're executing on it. We're trending towards it. So I'd say we're looking good.
Yeah, and so I think just a final question. If we look at your ARR, it's a bit clouded by migration effects as you are moving clients to the new platform, and so you get this. I guess the reported ARR is not as clean as it would be, and so you will get a cleaner ARR over time. When would you say that these migration effects will stop, basically?
Yeah, for now, what we see in the foreseeable future, they will be less and less affected by it during the year. So by the end of the year or first quarter next year, but that is we can't really see into the future that much. It could also be that a few more of our larger clients. Not that we're really depending on any clients like that, but if they migrated, that sort of hurts us. But that's why we've put this in the report so we can have transparency around this. So you guys out there can understand what's happening.
Absolutely. Well, I'm afraid that we're running out of time, but thank you very much, Patrik, for presenting. It's very welcome, and thank you to everybody for listening.
Thank you.
Hej allesammans och välkomna till ABG Investor Days. Med oss idag har vi Anette Billing och Johanna Eriksson från B3 Consulting Group. Tanken är att de kommer att presentera B3 för oss i ungefär 20 minuter och därefter så kör vi en liten Q&A på typ 5 minuter. Så med det sagt så är rampljuset ert.
Tack så mycket. Då börjar jag. Anette Billing heter jag då. Vi hade nog en liten bild, funkar inte den såklart. Sorry. Vi tänkte lite 4 punkter. Vi börjar tänka göra en kort summering om B3 först. Och sen titta lite grann på vår affärsstruktur och hur vi ser ut organisatoriskt. Så vad vi gör våra affärer, vilken typ av affärer. Vi kommer gå in på vår strategi och våra finansiella mål. Och sen har vi ett litet varför investera i B3. Så vi börjar med lite kort om oss på B3. Vi är ju då ett IT-konsultbolag som jobbar både med IT-konsultingtjänster och managementtjänster. Har funnits, vi är på vårt 20:e år. Vi har 19 års bokslut med oss. Och vi är 800 plus medarbetare i Sverige och 200 drygt i Polen. Polen är då ett intressebolag som vi i sista rapporten har också valt att illustrera ekonomiskt för att lyfta fram. Det är ett bolag som omsätter mer än 100 miljoner så därför har vi också en sån princip nu då. Och det kommer Johanna att visa lite mer på. Vi finns på 11 kontor, allt ifrån Sundsvall i norr ner till en kändis framme. och ner till Malmö i syd och 2 kontor då i Polen. Vi har fått många utmärkelser genom åren. Ett antal Gasell-företagsutmärkelser. Men också blev vi utnämnda till Europas bästa arbetsplats. En av Europas bästa arbetsplatser genom Great Place to Work. Men också vann vi faktiskt årets karriärföretag förra året. Vilket är väldigt kul. Gick in på börsen 2016. Så det vi är lite kort. Vår vision är att vara Sveriges bästa konsultbolag. För våra kunder, våra medarbetare och våra ägare. Vi har 3 värdeord som är väldigt viktiga för oss. Det är energi och vi har ett väldigt driv och engagemang i att förändra och förbättra. Och det är faktiskt en av anledningarna till att jag är på B3 för det är viktigt för mig att hela tiden kunna utveckla och förändra bolaget till någonting bättre såklart. Och vi är väldigt engagerade i att välmående. Så att wellness och hur våra medarbetare mår och tillsammans med våra kunder är väldigt förknippat med vårt värdeord energi. Då. Erfarenhet. B3 är känt i branschen för att vi har väldigt erfarna konsulter. Vi har rekryterat väldigt mycket erfaret och är också viktigt när vi går in till våra kunder att vi har ett väldigt gott renommé i våra kunduppdrag. Att B3 är duktiga konsulter och erfarna. Vi jobbar också mycket med olikheter och inkludering. Så att olika typer av utbildning, bakgrund och så vidare, det är vi viktiga med att leva efter. Och det skapar också bättre resultat. Så 3 viktiga värderingar som är väldigt tydligt för oss på B3. Våran succémodell då, den handlar om 4 komponenter. Nummer 1 är att vi attraherar duktiga entreprenörer som vill vara med och bygga och starta bolag i vårt B3-bolag eller i vår B3-koncern. Så då är man minoritetsägare i ett bolag och så får man starta upp det och driva upp det. Och sen efter en period så köper vi loss entreprenörerna kan man säga i någon form av earnout. Och sen så jobbar de oftast kvar då, som vd för det bolag som då är helägt för oss. Väldigt viktigt, skapar tillväxt, väldigt drivna, engagerade ledare som kliver in och bygger de här bolagen. Vi har också i vår strategi som vi kommer till att vi har ett mål att starta 1 till 2 per år. Vilket vi ska försöka hålla. Vi har ett väldigt brett erbjudande. Allt ifrån tjänster till kompetenser och också geografiskt som ni förstår ända från Sundsvall i norr ända ner till Malmö då i söder. Och det är allt ifrån managementtjänster till utvecklartjänster till cloud och infrastrukturtjänster. Jag kommer in på det sen då. Och en viktig komponent såklart är den här kulturen som vi står väldigt starkt i. För det är ju så att vår viktigaste tillgång är våra medarbetare. Trivs man och utvecklas i ett konsultbolag så blir man kvar och så rekommenderar man in kollegor och vänner i branschen. Och på det sättet så har vi också möjlighet att växa. Då. Och det är det som också är, så är det hos oss. Man trivs väldigt bra på B3. Vi har en väldigt hög då ENPS som vi kommer att komma tillbaka till och 90% av våra anställda är nöjda.
Ja, hej allihopa. Johanna Eriksson heter jag, CFO på B3. Vi ska titta lite på siffror och om man ser på B3s långsiktiga utveckling så är den ju väldigt stabil. Vi har haft en väldigt god tillväxt som framförallt har varit organisk. Man har gjort förvärv bakåt i tiden, men lite som Anette pratade om innan så är framgångsmodellen våra startups som verkligen har drivit vår tillväxt. Vi har ju också vuxit som ni ser i antal medarbetare. Det har gjorts ett fantastiskt jobb på B3 med att stärka vårt varumärke som arbetsgivare så vi attraherar väldigt mycket kompetens till vårt bolag. Så det är jättekul och det är vi väldigt, väldigt stolta över. Det som också är väldigt kul att se det är vår resultatutveckling. Vi har i princip dubblat vår EBIT de senaste åren. Och det beror på, framförallt på att vi har genomfört ett åtgärdsprogram som har löpt egentligen över hela organisationen. Vi har såklart kapat mycket kostnader, men vi har också jobbat mycket med operationell effektivitet i organisationen och det har gett resultat. Så att nu har vi ju fantastiskt fina marginaler och vi förväntar oss också att kunna ligga på de här marginalerna framåt om man jämför med historiken då. Så en väldigt bra bas också att stå på. Vi har gjort vår läxa och sett över vår kostnadsstruktur. Eh, 2022 har vi ganska nyligen stängt. Fantastiskt bra år. Vi växte med 24,5%. Också primärt organiskt. Och landade på en marginal på 12%. Det som är väldigt kul är också att vi har passerat miljarden i omsättning. Så vi landade på 1,148 miljoner i omsättning när vi stängde året då. Och som sagt, vi dubblade våran EBIT till 137,7 och landade på en marginal på 12%. Så väldigt starkt år för oss. Vi hade en otroligt bra H1. Väldigt stark efterfrågan, väldigt stark beläggning. Så att 2022 var lite av ett rekordår. Och vi har också i kombination lyckats höja våra timpriser, vilket har gett den här effekten då. Så jättekul när vi summerar året att vi också kan höja vår utdelning till aktieägarna ganska kraftigt jämfört med föregående år. Och så inledningen av 2023 har också börjat väldigt bra. Vi landade på en tillväxt på 11,7%, marginal på 12,6%. Och det man kan säga är väl att vi fortsätter att attrahera nya medarbetare. Det är jättekul, vi växer fortfarande i antal medarbetare. Det vi också ser och har signalerat till marknaden nu det är att det är ett mer som vi kallar normalt läge. Och vad menar man med det då? Jo, det är en mer normal beläggning och också lite tuffare konkurrens om uppdragen. Det är fler konsulter tillgängliga som slåss om uppdragen. Men vi förväntar oss fortfarande att kunna leverera bra resultat. Och vi ser också att vi under Q1 har stärkt våra resultat per aktie. Och det som Anette också sa att från och med Q1 så har vi valt att gå ut med siffror på vårt intressebolag i Polen. Vi får väldigt mycket frågor om den polska verksamheten så då har vi valt att lämna ut mer information till marknaden. Om man då ser på, för de ligger ju inte inkonsoliderade idag, men skulle man konsolidera in Polen så har vi försökt att illustrera vad det skulle ge för effekt. Och då skulle vi landa på en tillväxt på 15,8% och en marginal på 13%. Så att det är en väldigt fin verksamhet som vi har i Polen då.
Härligt. Då ska jag hoppa ner lite grann hur vår struktur ser ut. Lite kort om vår organisation, lite schematiskt då. Så vi är indelade i 3 affärsområden för att också gruppera. Vi är ju 24 dotterbolag i organisationen i Consulting Group. Och där vi då har dotterbolags-vd:ar och en specialistinriktning kan man säga per bolag. Och de här har vi grupperat då i 3 affärsområden. Ett som heter Digital Experience and Solutions hette tidigare Digital Innovation. Och det har vi bytt namn på därför att det här talar mer om vad vi gör. Så här handlar, jag kommer att berätta mer sen vad det är i den. Men det finns 9 bolag där i och 2 då som är joint venture, ett i Polen och en nystartad startup som heter Grit som startade i hösten 2022 som ligger då som ett 50-50-ägt bolag. Digital management, där har vi 7 av våra bolag som mappar in där och sen har vi Cloud and Technology Platforms med 6 av bolagen då. Och omsättningsmässigt så är Digital Experience and Solutions som så stor del är och systemutveckling. Det är vårt största affärsområde, omsätter ungefär 40% av vår omsättning. Och sen är det 30-30 på de övriga 2 då. Så det är den enkla strukturen och att vi bara mappar in. Och sen har vi både sälj och ledning i de här affärsområdena. Digital Experience and Solution, där har vi också nöjet och det har vi också gjort pressrelease på. Attraherat en tunging i branschen, Anders Nilsson, som kommer in och ska leda det här affärsområdet. Jobbar på HiQ i dagsläget men kommer börja hos oss 1 oktober. Stor erfarenhet av att bygga den här typen och växla den typen av business då. Och här bygger vi då applikationer, applikationsprogramvara, digitala kundupplevelser, webbar, appar och så vidare. Men också produkter och tjänster hos och med våra kunder. Exempel bara för att liksom förstå vad gör vi idag. Ja, men det här är 2 viktiga kunder hos oss som är Epiroc. Då har vi byggt en digital plattform för dem där vi har uppkopplade maskiner i gruvorna för att se hur de mår då i realtid. Så vi kan liksom underhålla och hjälpa. Epiroc kan underhålla sina maskiner i rätt tid då. Så en digital plattform, en IoT-lösning. Och Parks and Resorts när ni går in på Gröna Lund till exempel eller på Kolmården, då är det vi som har byggt de här webbarna och de här biljettförsäljningssystemen som är åt Park and Resorts. Så typiskt det, men väldigt mycket systemutveckling. Det är Microsoft-plattformar och det är Java-kompetens som man pratar om, frontend och backend, UX-designers och så vidare. Allt det här finns i den här enheten. Så mycket systemutveckling, men också möjlighet att jobba i team som är viktigt för oss framåt. Digital management. Här är det då Fredrik Doleus, också ny, inte inom B3 men ny som affärsområdeschef, över 20 år. Erfarenhet att jobba med den här typen av kompetens som har klivit upp och har ersatt en kille som går i pension. Här hade vi våra 7 bolag och 30% av vår omsättning ungefär. Här jobbar vi med affärsutveckling, agil transformation. Vi har stor kompetens inom bankverksamhet, utveckling av bankernas verksamhet. Förändringsledning, säkerhet på strategisk nivå ligger det här affärsområdet. Men också ett stort fokus på e-hälsa. Och vi har 2 bolag inom bank och försäkring som fokuserar och 2 faktiskt inom e-hälsa. Och inom e-hälsa har vi ett bolag som är mer på verksamhetssidan. Ganska mycket liksom läkare, sjuksköterskor som har kommit till oss som hjälper till med utrullning av nya journalsystemen. Det pågår ju några sådana i Sverige som ni vet. Där har vi en ganska stor leverans. Och sen så har vi också teknisk hälsa och sjukvård i olika teknikplattformar då. Så två exempel då med Info Solutions där vi har byggt en digital lösning för att hjälpa till med att effektivisera kommunikationen inom vården då, så remisshanteringen är mer digital i en plattform. Och sen inom trafikförvaltningen när ni köper biljetterna för att åka SL, det är säkert några av er, så har vi också varit med där och hjälpt till att effektivisera den, både köp och också betalsystemet där med ett antal konsulter. Så inom Cloud and Technology, det är det som växer mest hos oss just nu. Här jobbar vi med effektiva, säkra och skalbara, också tillgängliga infrastrukturlösningar. Och här är Martin som är ansvarig för det. Han har varit med länge i den branschen, både på Q-bransch och på Dimension. Mer än 25 års erfarenhet. Kan det här utan och innan. Till exempel då Almi är en kund som vi har jobbat länge med. Där har vi det vi kallar för partnerskap. Vi hjälper dem med mycket. Och där har vi hjälpt dem att komma in nu i ett privat mål inom Azure som har gett mycket fördelar för Almi. Men också Skolverket, där vet ju ni säkert, ni som har barn, att det görs sådana här digitala nationella prov som ska bli digitaliserade. Där hjälper vi till med att kvalitetssäkra säkerhetsdelen. Nog så viktigt. Så det är lite våra affärsområden och lite exempel på dem. Och så slänger jag med Polen också då bara som en liten påannonsering. 5 års. Vi ska på 5-årsjubileumsfest med dem här under våren. De har varit med oss i 5 år. Fantastisk framgångssaga. Startade då 2018 och är i dagsläget över 200 anställda. Några av deras kunder, de jobbar också med alla typer av plattformar och olika typer av lösningar. De har också 2 ganska stora kunder. En som jag får prata om som heter Bra Flyg. Så när ni bokar en flygbiljett med Bra Flyg så är det vi som bygger den ifrån Polen. Och sen har de ett stort åtagande till en svensk bank då ifrån Polen. Väldigt, väldigt operationellt effektiva och duktiga i ledning och styrning av den här businessen. Jag är mäkta imponerad av de här killarna faktiskt. På kundsidan så finns vi inom de flesta segment ska jag säga. Det som vi inte är stora på det är ju inom retail. Och det är jag lite glad för just nu för det går ju ner lite grann på retail-sidan kan man säga. Den är säkert hört idag, jag vet inte. Men bankfinans fortsatt starkt. Även industri har ju ganska stora orderstockar. De har inte hunnit med att leverera under covid. Så där är vi också med på ett antal av de kunderna. Telekom, entertainment hörde ni, Park and Research. Filmstaden har vi byggt både appen och webben. Och sen inom e-hälsa då, inom de flesta regioner. Men också hjälper vi till med Kry och Boka Direkt. Bokar ni där så har vi som byggt det. Och så viktigt är att vara relevant och stor inom public, inom konsultverksamheten. Så de som har de här stora avtalen, då är man relevant. Och vi har de här stora kammarkollegavtalen till exempel. Men vi är också direktavtal med några av de här stora då på public. Och det är liksom lite bra att ha i botten då. Johanna? Det kan hoppa en till dig.
Ja. Vi har ganska nyligen gått ut med nya finansiella mål i samband med att vi också tog ett omtag om vår strategi. Och det är inga ofantliga nyheter. Vi ska fortsätta växa lönsamt de kommande åren. Och ett av målen är att vi ska uppnå 1,7 miljarder i omsättning. Det innefattar också vårt polska bolag. För under den här perioden, från och med nu till 2025, så ska vi konsolidera in Polen i våra siffror. Vi räknar också med att kunna leverera bra marginaler, 12% över den här perioden. Vi ska fortsatt ha en skuldsättningsgrad som motsvarar 1,5 gånger ebitda. Också fortsätta såklart att dela ut till våra aktieägare 2/3 av vinsten. Och sen har vi också lagt till att vi kan komma att göra återköpsprogram framöver. Och det gjorde B3 nu i Q4 och syftet med det var att använda de här aktierna, återköpta aktierna till kommande förvärv av minoritetsandelar i de här startupsen som vi har hört om. Så då köpte vi tillbaka aktier för ungefär 50 miljoner. Så att det är också en ny komponent där in i B3 att vi kan komma att använda oss av den funktionaliteten.
Lite mer om strategin, lite av de byggklossar som vi nu har varit väldigt tydliga och fått till en ganska tydlig ny 3-årsstrategi. Och då kan man säga så här, om någonting fungerar väldigt väl så behöver man ju inte göra om det. Så därför har vi låtit bevara framförallt det här med våra medarbetare. Att trivas och utvecklas som medarbetare är ju urviktigt för oss. För det är det som liksom driver oss och en väldigt, väldigt viktig driver. Det är den största komponenten. Och fortsätta att skapa energi kopplat till det. Och sen att fortsätta med startup och fortsätta att utveckla våra bolag. De 2 komponenterna är vår grundplatta i strategin framåt. Och sen över tid blir mera fokuserad på några av våra kunder. Man kan säga i dagsläget så har vi mer än 200 aktiva kunder. Det tjänar oss väl idag. Vi har ganska lätt att managera vår business kopplat till den kundbasen. Över tid så behöver vi bli lite större på några konton. Så den strategin ligger nu hur vi ska förflytta oss. Och sen är det viktigt att vi levererar lite mera kopplat till teamleveranser. Att man sätter ihop det kallas för crossfunktionella utvecklingsteam. Där man har man har liksom upp till 8 stycken i ett sånt här team som då blir ett agilt utvecklingsteam. Det är viktigt för det ger ett större värde för våra medarbetare men också viktigare för våra kunder när vi kan komma in och leverera på det sättet då. Och sen fortsätta med våran specialiseringsfokus, det vill säga man ska få liksom vara specialist i sitt bolag och bolaget ska ha sin specialistprofil. Och vi vill fortsätta, vi är även nominerade i år, ska vinna årets karriärföretag såklart igen. Men vi är nominerade och vi har också klättrat i Allbrights jämställdhetslista från plats 35 till plats 10 år. Så vi är ett av de jämställdaste bolagen i Sverige. Så, vi har lite olika begrepp. Vi pratar om team B3. Här pratar man om allt ifrån wellness, athletics, culture och learning. Så vi har liksom en plattform med något som heter team B3. Och team B3 är ett koncept för att liksom verkligen få våra medarbetare att må bra. Och att man får vara med om, jag vet inte, vi har 140-150 aktiviteter per år. Och då är det cross alla bolag. Så vi verkligen lär känna varandra men också gör saker tillsammans. Som gör att det är roligt att vara på jobbet med mina kollegor. Vi har en learning-plattform som heter B3 Academy. Och där ser vi till att kompetensutveckla våra medarbetare i relation till strategin. Men också det som är högaktuellt just nu kopplat till någon form av bolag eller någon trend på marknaden. Så vi kan slänga om och göra egna utbildningar internt. Då. Och sen så har vi det som heter B3 Include. Här är det viktigt för oss att vara relevanta framåt till olika typer av aktiviteter. Till exempel Changers Hub, men också Women in Tech. Då. Så att attrahera mera kvinnor men också hjälpa fler utvecklare från andra typer av kulturer in i IT-branschen. Så där investerar vi ganska mycket. Ja, det viktigaste, jag måste backa, förlåt. NPSen, den är ju 63 och ni som kan det här vet att den går från minus 100 till plus 100. Så 63 är urstarkt resultat. Snittet i branschen ligger på 11. Så jag har aldrig själv varit på ett bolag med 63 i NPS. Det är jättebra. Det är att jag kan rekommendera andra att börja där jag är. Så det är verkligen, jag kan rekommendera bättre till andra i branschen. Då. Och 90% nöjda medarbetare. Så där är viktigt kopplat till att vi vill fortsätta att utveckla och ta hand och bevara våra medarbetare. Då. Klockan går. Det finns ett antal trender i branschen. Allt ifrån cloud security, automation, low code pratar man om. Och där är vi relevant till något som heter Dynamics till exempel. Då är det inte så mycket kodning utan mer konfiguration, installation. Och sen systemutveckling. Nu pratar man om att det plockas mera hem, mera local. Och då är det främst från Indien, ska jag säga. Vi ser fortsatt ett väldigt bra nearshore samarbete hos våra kunder. Då. Och sen IoT och AI, urstarkt. Mycket snack runt. Vi har en profil kan man säga, en advisor anställd hos oss som heter Christian Lauritsen som syns i många sammanhang som utbildar våra kunder inom AI. Och vi har ett team kopplat till det här och ett bolag. Då. Så där kan man säga det här är viktigt och här är vi relevanta inom alla de här trenderna. Och kopplat till vår strategi då, så har vi identifierat 3 områden där vi tycker det är extra viktigt att växa. Det är multicloud. Man kan inte bara vara gift med Microsoft. Kanske ingen som är från Microsoft här hoppas jag. Men vi måste också vara med AWS och Google. Och då pratar man om multicloud. För att går jag bara med Microsoft då tappar jag en affär. Och jag som kund får en leverantör som kan hjälpa till med alla delar. Då. Här finns det, man pratar om nu i sista Gartner att 25% av marknaden har gått cloud. Så det finns 75% kvar att ha en business på här. Så det här är jätteviktigt och det växer vi. Agila team, 70% av de som tar sätter någon form av budget, IT-beslut, pratar om att de vill köpa mera team från leverantörer som satsar på det. Så här är jätteviktigt för oss att både utbilda men också ett bra erbjudande till våra kunder. Och säkerhet, det slår igenom överallt i det vi gör just nu. Cybersecurity men också teknisk infrastruktur, kompetens. Och här har vi också ganska stark setup ska jag säga. Okej, marknaden då. Johanna sa lite grann att Q1 är mer normalt och det är ungefär det vi vet. Det är ganska osäker marknad. Det är liksom osäker. Vi har svårt att se vad som kommer hända Q2, Q3 över sommaren nu då. Men vi hoppas att det blir som Q1. Det är det som vi säger mer normal marknad. Vi ser att det är mer affärsdrivna IT-beslut, mera automatisering, effektivisering i verksamheten hos våra kunder för att de ska bli mer effektiva i den lite osäkra marknaden vi är just nu. Då. Säkerhet nämnde jag, väldigt stor efterfrågan på, men också kompetensutveckling. Och för mig är det jätteviktigt att i nästan alla medarbetare på BT är relevanta inom secure, inom det agila men också inom cloud på alla nivåer. För det är det som är fundamenten Och sen kan man ha sina specialistkompetenser då. Så därför har vi liksom byggt upp både strategin och vår academy kopplat. Så det här ska hänga ihop då.
För att runda av lite då, varför ska man investera i oss? Det finns väldigt många skäl, men vi har valt ut några. Och som vi har sett tidigare så har vi en väldigt stabil tillväxt och nu också bra marginaler kopplat till det. Så det är ju en väldigt stabil bas att stå på. Vi har vår framgångsmodell med startups. Vi har också en väldigt stark finansiell position så vi har kapacitet att ta ytterligare investeringar framöver. Vi har en väldigt låg skuldsättning just nu. Vi har också vårt starka varumärke som arbetsgivare så vi fortsätter i en konkurrensutsatt marknad att attrahera mycket nya medarbetare och också väldigt nöjda medarbetare som stannar kvar, vilket är en otrolig styrka. Vi har också en väldigt bra riskspridning, en bra stabil kundbas. Så att alla de här delarna ihop gör att det här blir ett väldigt bra case tycker vi. Vill du lägga till något?
Nej, jag tror att det kan komma en fråga.
Ja, men det kan det göra. Vi har snart slut på tid.
Ja.
Jag tänker att vi kan ta en snabb fråga. Och det handlar om 2023 såklart. Vad ser ni mest fram emot under 2023?
Mycket. Jag skulle verkligen vilja landa några nya startups. Det skulle vara urkul att få lansera det och pressreleasa det. Ja, mer ser vi fram emot. Det är väl mycket.
Ja, men att få exekvera på den strategi vi har lagt nu. Det ser jag fram emot väldigt mycket.
Och jag som är lite nyfiken då kring detaljer och sådär. Ni har ju gått in i era rapporter på att ni har 50% exponering mot cykliska sektorer och 50% mot ocykliska. Men om man får gå in lite på projektportföljen, hur ser fördelningen ut mellan långa och korta projekt?
Vad ska man säga? Det är väl ungefär, säg att 70% ungefär kan vara längre än ett år. Helt ute och cykla då.
Men ungefär så. Sen är det här med projekt har ju fått en annan betydelse. För nu kan ju ett projekt vara ett team som har någon form av åtagande. Och i det teamet kan det komma i och ur kompetenser. Så att tidigare, jag har ju varit med länge i den här branschen, då var det liksom ett projekt som man levererade liksom i ett scope. Nu är det lite mer agilt och det kan liksom dra ut på tiden. Så att jag skulle nog säga att projekt är nog i alla fall minst ett år då. Så. Den är ganska svår att svara på.
Men skulle man kunna säga ändå rätt lång tid.
Ja, det är det.
För en sån som är i alla fall.
Sen kan ju ett projekt vara en förstudieanalys inom managementdelen. Då kan det vara en månad. Det kan ju också vara ett projekt som man får. Liksom. Så den är svår att svara på.
Ja, men stort tack för presentationen där, Annette och Johanna. Och stort tack till alla andra som var med och lyssnade. Tack så mycket.
Tack.
Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kalinowski, and I'm an equity research analyst here at ABG. With us today, we have the CEO of Midsona, Peter Åsberg. The idea is that he will present to us his company for about 20 minutes, and then we will have an opportunity for a brief Q&A for about 5 minutes. And with that said, the floor is yours, Peter.
Thank you so much, Nikolai, and thank you to the audience also. I will take you through the journey of Midsona, who we are, where we are, and where we're going. But I think we can linger on this first page for just a few seconds, because this is really a crash course in terms of what Midsona is. Midsona is all about healthy and sustainable food. So food for both the people and the planet, and we reach the consumers via a number of strong brands. If you're Swedes, you will probably recognize some of the brands, and hopefully you're consumers yourself. Other brands are international brands that are iconic brands in their respective countries. I'll start by a little bit of an introduction, and I'll take you through basically the journey of Midsona for pretty much the last 10 years, because it also says quite a lot about the future for Midsona. Midsona was on pretty much a constant growth journey from about 2012 until the early 20s. This journey was driven by a number of very specific factors that still are in play in my mind. It's the overall interest for health and well-being, to eat both healthy and sustainable food. The market, and at that point in time in 2012, we were only a Nordic company. The market at that point in time was extremely fragmented. And we set out on a journey to consolidate that Nordic market by building our own brands, but also by acquiring good family companies. And I've said this before, but I say it again, it's half a joke, but there is a certain truth to it. I've spent a lot of time drinking coffee with owners of family companies, because that's usually how it started. We identified companies that we were interested in. We made contact. We met. The first meeting was also just a nice meeting often, because the owner said that we're not for sale. And we went home again, but we kept in contact. And then at some point in time, there was an opportunity because of a succession question, because the owners had taken the company to a certain level, and taking it to the next level would be much harder. And then it was quite natural to basically contact Midsona. And this is what you see here at the bottom, that year after year, we have acquired 1 or 2 companies basically, by that building a stronghold in the Nordic market. Another thing that we identified back in 2012 was the fact that a lot of the sales was done in specialty stores, so basically health food stores in the Nordic countries. Our conclusion was that if we want health and well-being to be a major factor in society, we have to offer the brands in the grocery trade, i.e. the big retailers like Inga, Coop and Axfood in Sweden and others in the other Nordic countries. So this is pretty much what we did, and we had a fantastic growth journey. Then in 2017, we concluded that we had a very good base in the Nordics, and we started to look at the rest of Europe. And what we saw was that the same factors were in play that we saw back in 2012 in the Nordics, i.e. fragmented markets, lots and lots of family companies, few strong brands. So we started a journey to establish a base in Europe. First by acquiring Davert in Germany as a platform acquisition, and then the French-Spanish company Alimentation Santé. So we started to do that. Then came the pandemic, and everything really changed. It meant that we had to focus on supplying. We had very good demand, fantastic years, especially 2020. It was a record year for us. Also 2021 was really, really strong for us. And we did not have the same focus on acquisitions in those years. Then the next phases, this is basically from end 2020 up until end of last year. It has been a tough period for us. There is no way denying it. We have been very hard hit by cost inflation. We have addressed the underlying issues, but it has taken some time. So 2022 was a little bit of a lost year for us in terms of improving profitability. I would say that the basis for getting back on track, starting to increase profits again, starting to expand the business, is much, much better now at the beginning of 2023. But I will come back to that later in the presentation. In terms of our scope, we started in the Nordics, and Nordics is still our main hub. It stands for roughly 70% of the business. Germany, DACH countries, about 20% of the business, and Southern Europe, with France and Spain, about 10% of the business. And of course, we want to expand all those different divisions and geographies, but the main focus going forward is to strengthen our position in Europe. That still remains as true as it did a few years ago. And there is room and opportunity for this, as said. The Nordic market is, relatively speaking, consolidated, but out in Europe, it's still a very, very fragmented market. Lots of companies having difficulties right now, and I would say that we are relatively seen very strong in the market right now, and we therefore have good opportunity to expand the business. A little bit about our categories and our brands. In rough terms, about half of our portfolio is organic, so it's ekologiska produkter in Swedish. About 30% is conventional health foods, and 20% is consumer health products. Consumer health is our heritage. That's where we come from. So that is basically the vitamins and dietary supplements. It's a solely Nordic business. It's a good, solid business with good profit levels, but it's not where we put our main focus right now. Our main focus is to grow health foods and organic foods, and especially organic foods. And we have a very strong position in organic foods. We have strong and leading brands in all the markets we're present. You probably know Kung Markatta if you're from Sweden. We have the brand Urtekram, that is a strong brand in Denmark and Norway. Helios in Norway, Davert in Germany, Selnat and Happy Bio in Southern Europe. So we have a very strong portfolio in the organic segment. The brands are typically national. So what we are doing is that we're having the same products, but under different brand names in different markets. Then a number of health food brands. Friggs, a very strong brand in the Nordic countries that we took from Sweden, then to Finland and to Norway. And at some point in time, we will always also take the brand to Denmark. I pretty much talked about this already, but this is our 3 operating segments. So our stronghold is the Nordics. It's also, although we had a tough year, we had at least a reasonable profit level in the Nordics. We had more challenges in North Europe and Southern Europe, to some extent due to the fact that we are subscale in those markets, and that's the main focus we have going forward now, to increase our scale in the rest of Europe. Very shortly about our strategy and targets. We have said that we should become a European leader in healthy and sustainable food. Our mission is to bring healthy food that is good both for people and planet. So it's both a health aspect for people, but also a clear sustainability aspect. The way to do that is by creating leading brand in attractive segments. It's via streamlining our operations, and it's about selective acquisitions. Right now, I would say that our main focus is not acquisitions, but we will come back to that in due time. Financial targets. Considering the downturn that we saw in 2022, we are quite far away from them right now. But for sure, we are very focused on getting back on the growth track again. I think that will happen in 2024 rather than in 2023. This year is more about profit. Our main target right now is to restore our EBITDA margins. We will do that step by step. We have had quite a high gearing in the company, so this is something that we're currently looking at, and I would say that we will probably be lowering gearing in the future. And it is our ambition to get back to a situation where we can pay dividends again. The industry. I've already talked about this, but it's still a very fragmented industry. Here you see some of the bigger players in the industry in Europe. It's Ecotone, it's a French-Dutch company owned by private equity. Lenatur and Naturason Santé, both French companies. Midsona and Heinz Celestial, which is a US-based company with quite a strong presence in Europe. So relatively speaking, we are a relatively large player in this market just because it's so fragmented. There are lots and lots of mid-sized companies. Here are some of the more well-known. We know a lot of those companies. We have been in contact with a lot of those companies. And if you go one page further, this slide is actually quite old, but it still holds true. We did a major analysis a few years ago to look at potential acquisition targets. We found almost 1,000 potential targets in Europe. And the thing is that nothing much has really changed in the last few years, because first came the pandemic. It meant that most companies were focused on their own business, also us. We did not do many acquisitions during this time period. And then came the cost inflation crisis. So in my mind, this is an industry that is ripe for consolidation. We want to play part in it, and we want to be one of the actors that are in the driver's seat making this consolidation happen. I would say that there is a lot of things going on in the market right now. I don't exaggerate if I say that I get calls or emails almost every day about companies that want us to buy them or want to start a cooperation. And this, I think, is a pretty strong sign of that there are a lot of the companies in the market, a lot of companies in the market that are in quite a difficult situation. And in that sense, we have a much stronger basis and foundation. So we want to be an active part in the consolidation of the market. There is a lot of discussion about consumers choosing cheaper alternatives when the wallet is a little bit thinner. Yes, we do have some of that effect, and we have seen some of that effect. But overall, I would still say that consumers are as interested as ever to eat healthy and sustainable food. I think that this is a macro trend. I think that this is a trend that will last. We see the increasing impact of climate change. People know, the society knows, that we need to eat more healthy and sustainable. It's a major part of fixing the climate issue that we have. Current status in the company. And we go to the next slide. I would say that we had a decent Q1 where we saw a lot of change, a lot of things moving in the right direction. It should be said that Q1 last year was not fantastic, but it was still decent. The real issues for us started in Q2 when we got the full impact of cost inflation from the war in Ukraine. Even considering that, we did grow sales slightly, and then we have still one discontinued quite big distribution contract that we have to deduct. We're quite happy about the sales development in that respect. EBITDA at about the same level as of last year, so that was also a step in the right direction because we had a number of quarters that we were quite negative. The gross margin was restored and even a little bit better than the same quarter last year, so up to 0.2 percentage points. And for the second quarter in a row, we had a very strong cash flow. We have been very focused on EBITDA and cash flow to get the business back on track again. So 2 strong cash flow quarters in a row, which is really, really great. The main thing that we worked on during last year, took some time, was to restore our margins. We were very hard hit by cost inflation. It was raw materials, transports, energy, pack materials, and so on and so forth. And this is quite a busy slide, but as you can see at the bottom, in quarter 2 last year, our gross profit margin was down 4.7 percentage points. It was minus 3.9 in quarter 3, minus 1.3 in quarter 4, and now the first quarter of 2023, we were up a little bit. So this was a sign that the measures taken to reduce cost internally, but also to push through price increases to the trade, has been successful. It should be said also that in quarter 1, we do not see the full effect of the price increases because many of them took place mid-quarter, say in February, and some even in March. So our expectation is, all else equal, that we should continue to improve our margins. We also see the first signs that commodity prices are actually coming down. You've probably read about this, that world market prices are starting to come down. We see some sign of this now. It's a little bit different in the organic industry because you don't have the same type of world market prices. You have to go back and renegotiate contracts by supplier, and that takes some time. But our aim is definitely to further improve margins and thereby get back to historical levels. My 20 minutes is soon coming to an end, so I'll talk a few minutes about the future also. And as said, I think that the platform that we have after a tough 2022 is much better now at the beginning of 2023. There are a few things that we will focus on now. First of all, we need to continue to develop our portfolio. Our conventional food brands have done very well, consumer health brands also. The main challenges has been in organic. The organic market has been down last year in pretty much all markets, and we have been going down together with the market. So putting a lot of effort into actually revamping our whole organic portfolio. I will come back and show a little bit about that later. We need to accelerate growth in mainland Europe. So in Germany, France, and Spain, because this is where we're still subscale, and this is where we had some margin issues really. We have put, to some extent, new organizations in place, a lot of good new people, very commercially focused, and they are starting to now work customer by customer, channel by channel, to actually increase our presence, because we have good brands, we have brands that consumers actually like. We just need to get them out in wider distribution, and a lot about this is to move them into the mass market or the grocery trade. We are streamlining our business, especially reducing complexity. I have an example of that. I will not talk so much about that right now. And we have said that this is a year where we're mainly focused on EBITDA and cash. So volume is not our main objective right now. Of course, we want to grow sales, but more important for us is to grow EBITDA and to maintain solid cash levels. And that brings me to my 2 examples. We have acquired a lot of companies over the years, and in terms of commercially and in terms of administrative, we have been very good at integrating them. When it comes to portfolio management, factory consolidation, there still is a lot to be done actually. I have to be honest and say that we do have a very complex portfolio. We have around 5,000 SKUs, 1,000 suppliers, and almost 100 brands in our portfolio. This is too much, I mean, clearly. And that's why I'm saying that the main focus for the rest of this year will be EBITDA and cash rather than volume. So we are starting now to really reduce complexity in the portfolio. We are trying to sell some part of the portfolio. We will discontinue some brands. We will cut out some SKUs, and we will significantly reduce our supplier base. And we have some good examples of that paying dividends already now, but even more so in the future, hopefully. Procurement, very important. Direct materials is about 60% of sales, and COGS around 75% of sales. So we're putting a lot more of emphasis in terms of how to source efficiently, how to pool our buying power better. And this is also something that we expect will pay dividends during this year and the years to come. Organic is something that a lot of consumers want to consume. But we have said that maybe organic is not enough anymore. So we have to also build more values around our organic portfolio. This is actually work in progress, so this has not hit the market yet, but we are right now in the midst of a major revamp of our organic brands in terms of how we communicate with a much more, I should say, much more edgy way of communicating them. And at least the first consumer tests that we have run are very promising. So, thank you for listening. We are getting back on track step by step. We will continue to work very hard on this during 2023, and we look forward to a brighter future for Midsona. By that, I open up for questions.
Thank you very much, Peter. Thank you for the presentation. Just a few questions from my end. You mentioned in the Q1 report that you released not too long ago that you aim to streamline the current product offering and perhaps discontinue some product lines. Could you perhaps let us know what geographies are relevant for potential discontinuations or perhaps divestments? Sorry.
Absolutely. I would say that the most complexity in our portfolio is in the Nordics, because that's where we have most brands, we have bought most companies. So I think a lot of the work will take place in the Nordics on the brand side. When it comes to SKUs, I would say it's all markets, but mainly Nordics and Germany, where we have the most complex portfolio. Suppliers, this is more about pooling suppliers. We are sourcing raw materials, the same raw materials from too many suppliers. So this goes across all divisions, I would say.
And I think if we go back a bit to the Q1 report, you managed to raise prices during one of the price modification windows in Q1, mid-February in Sweden. How well would you say that your price increases have been met by stakeholders?
I would say that the target that we set out to achieve, we have achieved, so we're very happy about that. Of course, there is always negotiations and discussions with our customers. But I would say that our price increases were very well founded. They were justified. So I would say that overall we succeeded very well in terms of implementing them.
Yeah. And you managed to improve free cash flow during the recent 2 quarters by improving working capital. Would you say that there is still some more work to be done on that front, or are we finished?
No, we will continue to work very hard on that. I should, however, say that Q2 is typically a quarter where we have some inventory build-up, because we're building up, one, for the summer seasons. We produce a lot before some of our factories close or half close for vacation period. And also we are starting to produce for the Christmas period actually now. So some build up probably in Q2, but then gradually down again. So we aim to continue to drive inventory down and manage working capital very tightly. Cash flow is very important for us.
Yeah. And I know that margin improvements and efficiency gains is at the top of the management team's agenda right now. But as you mentioned, down the line, you have the opportunity to perform some strategic and selective M&A. How would you say that the market for M&A has changed if we look now compared to, say, 2 years ago?
It has changed quite a lot. I would say it's quite dramatic, actually. In 2021 and also 2022, we were quite reluctant to do any M&A. Because what happened was that most companies had very good years in the pandemic, especially 2020 and to some extent 2021. So multiples were extremely high, and the sellers wanted to sell at projected earnings for 2023 and 2024 that were even higher. And we saw it ourselves that this is probably not sustainable, the margin levels that the industry is enjoying. So we were very reluctant to buy anything in this time period. Now, valuations has come down a lot. I would say that there are, as I said, companies knocking at our door pretty much every day, wanting us to buy them. So there are quite a few companies that are distressed, and relatively speaking, we are on the up. Our profits have stabilized. I think there is good hope that they will improve further. So I think that there is very good opportunity. That said, we still have quite a lot of work to do internally, and that will be our main focus for 2023. But we are starting to look at potential acquisitions, yes.
Excellent. Well, thank you very much for this, Peter. I'm afraid that we are out of time, but thank you, Peter, and thank you to everybody else who was listening in.
Thank you, and thank you to the audience. Thank you so much.
Okay, good afternoon everyone and welcome to this next presentation here at ABG Investor Days. My name is Simon Granat. I work as an equity analyst at ABG covering IT and tech companies. And with us today we have the pleasure of hosting eWork. Its CEO Karin Schreil and also CFO Claes Reveil will present the company for about 20 minutes and then we will follow up with our regular Q&A session. So with that said, please go ahead and present.
Thank you so much, Simon. And my name is Karin Schreil, as you said, Simon. I'm the CEO at eWork Group. And I'm joined by Claes.
Hello.
Yes, Claes Reveil, our CFO. And thank you so much for the invitation to present here today. We will give a short update, as you said, about our company, our market, and why we believe that we have a very interesting position for the future. After that, we'll talk more about our trends and results. So, first of all, eWork Group. We are a market-leading total talent solutions provider. And we form successful collaborations. We connect our clients with the right professionals to enable our clients' digitalization, including emerging technologies such as, for instance, AI, green transition, and also strategic development. And our business revolves around the services that ensure the right expertise for important assignments at the right time, at the right place, and at the right conditions. And in doing so, we are accelerating the important development of our clients' businesses, growth, development, and performance. And our delivery does not rely on our own employees. We continually develop our extensive network of partners and professionals. It currently holds more than 105,000 professionals. And by providing the access to attractive assignments with our clients, we also contribute to our partners and professionals' personal development, their growth, and their potential. So, moving ahead. From our original role as a consultant broker, we are increasingly transitioning our company to becoming a strategic partner in total talent management. And this is an evolution where we join forces with our clients, our partners and professionals. We act as the bridge to address the ever-changing need for skills and talent as a whole. And we also hold a strong position in a market that is driven by megatrends. Megatrends, if you look to the right, the future of business and society, where digitalization and the emerging technologies, green transition, are occurring at an increasingly rapid pace. On the other hand, to the left, we have the future of work trends and a growing desire by many to work under flexible conditions, have an independent work life with challenging and interesting tasks. And the whole economy as a whole, as well as the workforce market, is indeed becoming more global every day. And this is where eWork comes in. We run and we develop our business along a number of different dimensions to maximize the value that we provide to our stakeholders. You see to the left on the client side, we have a service portfolio that consists of 3 service lines. Consulting services, meaning that we provide actual consultants to our clients in the areas where skills are needed. The managed services, which is about outsourcing the task of finding the skills and the talent to eWork. And that's a strong trend in our industry, that more and more clients, companies and organizations outsource the work to find the right skills and the right talent. And finally, financial services that we add on to consulting services and managed services to provide the best possible conditions for financial performance with our clients. And we have 5 main markets where we operate. Sweden is the biggest, that's our home market. Norway, Poland, Denmark and Finland. And we operate across a big, broad base of industries. From consulting, tech and telecom, which is, of course, an industry and a segment where a lot of skills are needed in tech and development. Manufacturing, automotive, life science, strong development driven by megatrends related to the green transition, electrification, and autonomy. Banking, financial services, a lot of skills needed for the digital transformation. Energy, utilities, and natural resources, where again, the green transformation comes in as a big driver. Retail, logistics, and services also undergoing major transformation towards digital retail and the logistics that comes with it. And finally, public sector operations, where a lot of skills are needed to be able to transform their operations to the future needs. To the left, we have the partner and professionals and the services that we provide to them. We have a member program that is aimed for the members of our network. The professionals and consultants on assignment, they have access to something we call eWork services, where we provide them with all the support and administration that they need to be able to focus on their assignments. And we have a Pay Express financial solution, which allows them to get paid for the work they do when they need in a timely way. We have today a network that consists of, as I said, more than 105,000 consultants across 50 countries in Europe and Asia mainly. And we have a number of skills represented in this network. Some of them are listed here, and we group them into skill practices, such as, for instance, project management and business development, digitalization, automation. We have a lot of system developers in various technologies. We have data scientists and analysts, and we see an increasing and growing demand for skills in this field. We have IT infrastructure and technologies, and last but not least, engineering, which is an area where the needs are indeed increasing. Again, related to the mega drivers, to the green transformation, to the digitalization. In Q1, we delivered and presented our results, and were able to report that the demand for professionals varied during the quarter. Some of our clients, particularly in the retail and telecom sectors, showed some hesitation, with fewer new assignment requests coming into us. However, we still see a high demand for skills with other clients in other industries, such as public sector, manufacturing, automotive, with, again, the latter one having major needs for skills to be able to drive their transformation. From a geographical point of view, there were also differences. We saw in Poland, once again, strong growth, very much driven by the need in the telecom and technology sectors. Overall, in total, we observed a decrease in the number of new assignment requests during the first quarter. But again, we also saw a very high and increasing demands with some of our clients. At the beginning of this year, the Norwegian Parliament adopted updated labour legislation, and that has caused some hesitation in the Norwegian market. We are working our way around and through and with this, together with our clients, and we still see some hesitation, but we are confident that we will be able to find the appropriate way of supporting organizations also in Norway with the skills they need for their transformation. We saw in the first quarter the positive effects from the broader client base. And the broader client base is due to the fact that we won last year a number of new frame agreements in public sector as well as in private sector. We were also happy to see that we got renewed trust and a new number of extended frame agreements with some of our largest clients. And that again contributed to the broader client base and the growing number of consultants on assignment. We also saw in the first quarter an increasing demand and interest in our financial services solutions in Pay Express that I mentioned before, and also the other services aimed for partners and professionals. We saw a fast-growing demand for our protective security services, which is services where we do background checks for consultants and personnel. That is growing rapidly, and we were actually able to close a separate contract with one of our larger clients to deliver these services in the first quarter. So it was also interesting to see, as I said before, that the development was slightly varying between the industries. We saw the demand for remote assignments outside of our main markets being really high, and in particular across the private sectors. Here you see the trends that I mentioned before, with the public sector, manufacturing, automotive industries still in need for a lot of skills and talent, whereas in retail, logistics and services, and also telecom, we saw a slightly different pattern in the first quarter. This is the distribution of skills during the first quarter in the assignments. As you can see, majority of the consultants that we provide are in the area of system development, product management, and business development. Engineering, as I mentioned before, is growing in numbers, and consultants in IT infrastructure and data management. Also good and high demand, and in particular in data management, analytics, and AI, we see an increasing demand. I mentioned also before, Poland had a good development, continued to have a good development in the first quarter. That goes also for Denmark, where our managed services offering is really taking off and driving the growth and development in the market for us. So with this, I'd like to hand over to Claes, who will take you through some of the trends and performance details.
Yeah, we
switch places.
Yeah.
Yes.
Good. Wait. All right. Thank you, Karin. Yes. First, for those of you who don't know, we work and follow us every day. I can say that we had a very strong 2022. Demand was high from all of our industry sectors at the same time. So we worked hard to respond to that. We made new wins, new client wins, and we also increased our client shares with many of our largest accounts. So that was a strong year. Therefore, also our order intake grew with 16% last year, year on year. Our revenue with a full 22%, and operating profit with the whole 44%. So we were very proud of that performance. Looking into last quarter, quarter one, we saw an order intake increase of 4%. And that's comparing to a very high reference number post-pandemic, where the demand was really booming. So it's of course satisfactory to see that our total new contracts signed in the period increased compared to that same reference point with 3%. That was good. We also saw a positive effect on order intake growth from price increases. But just as Karin said, we could also note a more diverse market and in sections than more hesitant. You mentioned both retail, telecom as those, whereas we saw very strong demand and increasing demand from other sectors, such as the public sector, where we had order intake growth of a full 21% in the first quarter. The demand from our automotive clients also remained on a very, very high level, just as it was during 2022. This development translates into changes in business volumes, where our ending balance for active assignments landed on 13,158. That is 9% higher than it was the same period last year. Whereas it was a decline during the quarter of 1.4%. And that should be compared to the increase we had in the same period of 2022. So some changes in the pace and the business volumes for us in total. Looking at the P&L, our revenue grew in the first quarter with 16%. And that was entirely driven by increased business volumes, translated into increased number of hours invoiced to our clients. We had no material effect from price increases in the revenue growth in that particular period. So that's entirely organic, volume-driven growth that we could demonstrate in the quarter. Our operating profit that grew with 14%, landing on 54 million for that quarter. Very much in line with expectation. The drivers for the profit increase being the same volume growth, for sure, supported also by what we all have reported previously, increased profitability through sales and incremental growth of our add-on services, being, for example, eWork Services and Pay Express. So we are pleased to see that. The cost level in 2022, when we entered that year, was on a quite anorectic, very low level, non-sustainable. So in line with our expectation then, we did not see and could not report the same level of scaling on cost, as well as operating margin increase that we could do last year. But that was expected, but obviously then not meeting fully the targets we set out for ourselves. So that was a little bit of our overall financial performance. In line with strategy and market focus, we have divided our operations in two main segments, being Market Unit Sweden and Market Unit Northern Central Europe. They are then in turn divided into 4 market units each. And we can just update you on how we performed in these different parts. For Market Unit Sweden, our order intake was flat compared to last year in the first quarter, whereas our net sales grew with 15% and our profit improved with a full 23% to 75 million. We saw definitely a difference and unbalanced development from different clients in Sweden, ending us in this development. And the focus here for us in Sweden last quarter was to allocate our resources when the demand was still high. For market units Northern and Central Europe, our order intake was up 15%, net sales and profit up 21%. We had strong performance and high relative growth for all market units excluding Norway, which was mainly unchanged compared to last year. Here, the focus is very much in this geography on increased collaboration, on market opportunities, shared clients, where we see several opportunities for us to develop cross-border. So that's a little bit our market segments. The financial targets we communicated earlier this year are 2, being that we aim to grow our earnings per share annually of at least 30%, and that we will also distribute dividends of 75% as a minimum of the net profit. And how will we achieve this? Well, we aim to achieve this by growing faster than the market, at a higher pace than the market in general, and also improving gradually our operating margin. To do this, there's a few things that will be very important for us. As a service provider, being even more focused on increasing stakeholder value, clients, partners, and professionals, obviously our shareholders. We will continue to develop our service portfolio and the solutions and the offerings to our clients therein. Strengthening collaborations in both parts of the value chain that Karin explained that we are working in. Increasing sales to our existing clients, very important, but also expanding our network. We aim to win within our client industries, new clients to eWork. We want to explore new markets and expand our market share. Scaling will be very important also going forward. Efficiency in our service delivery is something we're focused on, as well as securing that our costs are growing less than our revenue. Simple mathematics there. And then the question is, did we do anything good in the last quarter? And we think we did. In terms of service development then, being important for us, we launched and now can offer full outsourcing on recruitment process. We also launched an educational portal with lexicon for our professionals. In terms of the client focus, we made an important step, outlining now 6 prioritized client industries that we want to grow in this to drive internal learnings, but also client value. Market expansion. We outlined the strategy, and we are also all the time certifying new countries where we can source from and deliver to. And in terms of the scaling, we made some important steps in how we run our platform. Yes, so that's basically what we did. Shortly then, e-work as an investment. Why should one invest money in the company? Well, we feel that at the core of this, we have a strong position in a dynamic market with a dynamic business model that is supported by some global trends. We call them future work, future business, but it's really helping us to deliver. But we need to do this in a good way, and building on that, we feel that we already now have a structural platform and base with our over 13,000 active assignments that we run on our digital platform, Verama, that we continue to invest in, but with that we can still realize a lot of value from. Our comprehensive service portfolio and our offering is something that we're still tapping into, and we feel that we, in many cases, can provide more value from to our stakeholders. Our strong client base, fantastic list of clients we have, and the relationship that are growing with them over time, all the time. We have the largest network, and it's growing, and we aim to grow it a lot more. So that's all the time the fundament of our business. Scalability in terms of the business volumes we have gained and aim to gain further provides new opportunities for profit improvement. And then we have the power to expand and make important steps. So basically that summarizes why we should be an attractive investment. Yeah.
Good.
You, Karin, sum it up?
Yeah, I think we're ready to sum it up, Simon. We can maybe have this slide in the background while we do so. This is the message we also shared when we presented the first quarter results. We summarized a strong quarter, as said before, and we are now confirming an unchanged outlook for 2023. Expecting to grow faster than the market, as we say, and increase our operating margin. Thank you.
Great. Thank you so much.
Thank you.
We'll have time for just 1 or 2 questions, as we are running a quite tight time schedule here today. But thank you so much for the presentation and the stock pitch in the end. And I think that one word that I've taken with me, also following the company for about a bunch of years, but also today, is the network effects. And we could clearly see them in 2020 as the market turned a little bit more sour. How do you view the network effects as we now see a more diversified demand situation, as you point out during the presentation here in 2023?
So I can maybe start off, Claes. So looking first of all at our own network, as I mentioned, very important, and one of our main assets is the big network. It's been built over 20 years since the beginning of our company in 2000. And gradually, organically, we have added in new skills and new talent to that network. And we aim to not just have the biggest network, but also the best network, the most relevant network, tapping into the needs of our clients. And of course, it's also equally important for us to be part of our clients' networks. And that's one reason why we want to be more focused on industries going forward, so that we can tap into the big trends of each industry. and be a good player for our clients and their networks in their turn.
Great. And then just one final thing, and that's relating to the fact that eWork has historically been an organic story, but we now see that there are more contenders out in the market. They are much smaller than you are, but there are certainly more players in the market.
Sure.
How do you view M&A and the opportunities relating to that?
So clearly we have an organic agenda that's supporting our ambition, long-term and short-term ambitions. But of course, that is a trend in the market. So with that said, of course, we are looking at those trends and seeing if there is anything in this for us. But our history is organic, and we have good faith and trust in the continued organic growth of our company, even so.
I believe so too. I think that summarizes this session.
Yes.
Thank you so much for attending here today, and thank you all the rest as well. So thank you.
Thank you so much. Thank you.
Welcome back to ABG's Investor Days. My name is Stefan Knutsson. I'm an equity analyst, and I follow the company that will present next, which is Prevas, a technology consultancy firm. And with me today, I have the onboarding CEO, Magnus Wilén. Welcome, Magnus.
Thank you. Nice to be here for the first time. Thank you everybody for attending. I will present myself actually, briefly, and then I will present Prevas, and I will present also how our first quarter was, and also how we look upon the way forward in 20 minutes. So it will be quite intense, but I hope you follow me anyhow. Talking about this change, so that we have our offboarding CEO, Johan Strid. He has been running this company for about 5 years now, and we have had a successful journey together with Johan. I will show you later on a graph of the development of Prevas during the last 5 years, which is quite an amazing journey. And I have now the opportunity to continue to build on the platform that has been built over the last years to take Prevas into the future. And as this is a major change, I will be the new CEO from June 1st. I just wanted to briefly tell you a little bit about my background. I'm an engineer. Prevas is an engineering company, and I'm an engineer from Royal Institute of Technology in Stockholm. I've been working in our customer base for quite many years, actually. I've been working within ABB and Sandvik in different roles, both in product development, R&D, and in production development and operations management. This means that I have a good understanding of the customer and how our customers think. After being a number of years in the industry, I actually moved into the consultancy businesses. So since 2008, I've been working in the consultancy industry. I started out in a small company called Detta in Västerås. We were 20 consultants at the time. And then I've been working together with this fantastic team, growing that business up to well above 100 employees in an organic journey where we grow that consultancy company. We made one acquisition, a small company called Tauberäkning. Then I ended up being acquired by Prevas. As you know, we're working with M&A within Prevas, and actually I'm a part of that process. So I was actually acquired into the company when Prevas a number of years ago acquired a group called Evotech. So that is my journey and my background. And what I believe is the strongest part that I can contribute to Prevas is both the understanding of the customers and understanding of how you organically and by acquisitions grow a successful consultancy company. So that is my background, so you know me. Magnus Wilén is my name, yes. So looking into Prevas, some brief hard facts, and then I will tell you a little bit more about the genuine parts of Prevas. We are an engineering company based in Västerås. Was founded in Västerås many years ago. It was 1985. But we're not only engineers. We also work within industrial designers. We have project management. We have business analysts. We have behavioral scientists, more or less. So a number of different competencies. But the core of Prevas is engineering. And I'm also an engineer, as I was mentioning. We are around 900 co-workers in the Nordic markets, with a major part in Sweden. We have operations in Norway and quite substantial business in Denmark, but we are a Nordic-based company. We made 1.3 billion SEK turnover last year with a healthy margin of 12%, which is rather okay in the consultancy industry, I would say. It's a level that we are aiming for. I'm coming back later on to that we have changed our financial targets for Prevas as well, that you might know of. We are certified with ISO 9001 and ISO 13485, which is within medtech development. So I will start with a little bit of the trends. eWork, we're talking about trends that is changing a lot. So I have put together some of the trends for you so that we can have maybe look into some of these trends. And it's quite a lot of trends, a lot of things happening in the world, isn't it? These are some of the trends. We have demographic changes, we have the climate changes, we have technological changes, we have the recently ChatGPT, AI, machine learning. It's a lot of things happening in the world, isn't it? And one way of looking into this is, oh shit, sorry for the word. It's terrifying. What is this? How can we treat it? How should we cope with all of these changes? And in Prevas, we have landed this, and we think that all of these are possibilities So our tagline is "Hello Possibility." And that goes through the whole company and how we think. We see the world and we see possibilities. All of these changes are possibilities. Moving further, this is our mission. Our vision. Ingenuity will save the world. We believe that we, through technology and people, actually can improve the world and ultimately save the world. That is what Prevas is about. And looking into our mission, is we co-create technological advancement for the betterment of all, the people, the planet, and the profit. And the most important part of this is that we co-create. We do not in Prevas believe in that we are the strongest by ourselves. We believe in cooperation, in partnerships. We're working with universities, we're working with our clients, we're working with the society. And we believe that we can form networks and then put together the best possible solution for the major problems we have and challenges in the world. And that is something that we at Prevas are working with. And we're really proud about being a part of this journey. And as shareholders, of course, the result of all of this work is a profit. I see the profit as a way of judging if we are doing the right things. And you will later on see if we are doing the right things in terms of profit as well. So what do we do more in detail at Prevas? We're working in two different areas. We're working in product development and production development. And here you have three different examples of what we do in Prevas. Our products that we develop, we have developed over 8,000 products over the years in Prevas. This Hövding helmet you might have seen out in the market. Prevas have been participating in developing this. It's a physical product. Normally our products that we develop are physical. They are advanced. This is actually a very advanced product with software, with hardware, with mechanical development. All of these things included in one product. We have advanced products as well. This is a system we've developed for sepsis. I don't know if you know the word sepsis, but it's, yes, you know, it's, thank you. This is an equipment for doing the blood analysis. In the past, it took days, quite many days, to do the test. You need to know, in order to analyze which kind of sepsis you have, you need to make a test. And we developed, together with a customer, an equipment that does these tests in hours instead of days. And that saves lives. I believe it's fantastic what we can contribute. The products we develop are normally always today connected to the cloud, connected to each other, Internet of Things and all things. So all of our products that we do are connected one way or the other to each other and to the other systems. Looking into production development, where we actually support our customers improving the efficiency in their manufacturing processes. One example here is in sustainable area. We have a software that we developed together with a research institute where we improve how you heat up steel in a steel mill in the more efficient way. When you utilize our software in this, you will reduce the amount of carbon oxide emissions quite substantially because you make it more efficient and the steel also gets a higher quality. So that's one example of sustainable production development that we do. We work a lot with automation. Actually, Prevas was the first company that put a cobot in production in Sweden. A cobot is a robot that interacts with people. So you don't need to put it behind fence, but you can actually work closely together with it. So we are building automation lines for many different customers and other areas with the automation area. And when we work also a lot with digitalization, one example there is Göteborgs Spårvägar, where we have been working for many years together to improve how they do their maintenance work. We worked with something called Enterprise Asset Management Systems. And it's a lot about digitalization. So that is product development and production development. That was what we do. And this is a humble view of our market. You recognize it? Actually, the world. What we in Prevas think is that we need to be on par with the demands on a global base. So when we think we need to have the competence to participate in the global market. We have areas where we are delivering services outside of Stockholm, outside of Sweden, outside of Europe as well. But we're not working, just to be clear, with Russia, for example, and Belarus, all of those. But we are working with our partners, so to say, partner countries in the world as such. One fantastic example here, I believe, is that we are actually making advanced FEM calculations for customers in India from Sweden. That's a way of showing world class, I believe. Another interesting example that we're working with is that we're developing gearboxes for e-drive systems for German customers engineered in Sweden. So vehicle industry, Germany, and we compete in that market from Sweden. It's not too bad, is it? I'm quite proud of it, as you might notice. Looking into our customer base, we're working with some well-known companies that a lot of people know about, of course. With Saab is our major customer, Ericsson, ABB, Sandvik, Atlas Copco, and all of these traditional large industrial companies. We also work with small startup, like the Hövding company, for example, is an example of a small startup that Prevas is working with. Our 5 major customers represent 25% of our business. It means that we have a good split between the different customers, which is excellent in a changing economic environment. You can also see the split between different industries, that where you have a quite substantial part in life science. It's a completely different business climate development compared to engineering, energy, etc. But we are in many different customer areas. Then briefly about our strategy. You might have seen this model in the past by Michael Tracy and Fred Viersema, where you can look upon positioning in this way. Either you choose to be choose operational excellence, like being the cheapest. You're making extremely efficient. That's one way of doing it. You can choose to be absolutely the best. Many product companies choose to be the ultimately best in their niche. That you can also choose to be customer intimacy, that you are close to your customer and adapting what you do to their needs. And our view upon this is this. Isn't it strange? Or yes, the thing is that Prevas consists of a network of nodes that working together and working individually. And each node choose how they are positioning themselves. If they are aiming to be the absolutely best in their niche area, or if they are closest to the customer, adapting always to their needs. So Prevas' strategy is to be so that each node actually decides on where they should be in order to be competitive. Some other key aspects in the Prevas strategy: add customer value. Everything is about adding customer value, and we work a lot with increasing how we go to our customers, putting together different competencies, partners, and improving the value that we send to our customers. We're building competitive strength. We're investing in different laboratories, in expensive softwares, in methods. So we are also working with building a competitive strength in the consultancy company that we are. We are a decentralized organization, which means that we have entrepreneurs driving the businesses locally. We believe that the decisions are to be taken close to the customer, not in a fancy headquarter far away from the customer. So that is an important part of our strategy that I strongly believe in myself. We have a dynamic network approach, which means that our nodes are working together based on the customer needs. So we're putting together different resources in order to make a higher value to our customers. But last but not least, Prevas is about action, action, action. We are action-oriented company, so we move forward in a quick pace, which we need to do in order to meet all these possibilities that we see. Okay, a little bit about Prevas, about our strategy, about who I am, and now how do we perform financially, which of course is extremely important. Looking into the first quarter, it was a fantastic quarter. We had historical records for many different metrics, more or less all of them, I would say. Turnover, profit, margin. We grew quite substantially in the first quarter compared to last year, which is a result, of course, of everything we do together in the company. And we reached a profit margin of 15%, which is decent, I would say, in the industry. Looking a little bit more into the details in this, you can see that we in the quarter grew the revenue by 25% and EBITDA by 35%. So we are actually improving the margin as we grow, which is rather good, I would say. One thing I would like to emphasize looking into the first quarter is was one working day more compared to last year, which drives, of course, influences the figures. Next quarter, it will be one day less. It's the way it is, but it influences the figures, which is important to have in the background. And this was the thing I talked about earlier in this speech. Looking from 2017 in terms of how we have developed the EBIT margin in Prevas over the time. As you can see, we were quite low. We were below 0. And then we have a continuous trend upwards, which means that we're now stable above 12% EBITDA, which I believe is where we should be. This is EBIT, by the way, so it's another figure in that sense. So it's been an excellent development within Prevas, and we have built a platform for continued growth in the future. We are a profitable company with a fantastic team, with a good market position, and we are prepared to continue this journey. Some highlights for the first quarter. We have revised our financial targets. In the past, we had a target of reaching EBITDA of 10%. Now we improved that to 12%. Because me personally, the board, and the company, and the people in the company, we want to work against targets that are striving and driving us. Having a target, our old target was 10%. Our target was to decrease the profit. That's nothing for us. We want to grow, and we want to move forward, of course. So that is one revised financial target. Another revision we were made on the dividend, which went from 50% up to between 40 to 60. And that is to give us more room in order to finance potential mergers and acquisitions in the future, to have more flexible situation there. During the quarter, we have integrated new companies. We have acquired 4 companies for last year. Factor 10 is a world-class software company we acquired. We have Bitsim now. It's a company with lens-to-lens technology and embedded systems in Kista, Stockholm. Coteco is working in process automation in Västerås. And then we have acquired a company called Myra Industrial Design, which means that Prevas now can actually develop a product from idea through industrial design, through product development, through industrialization, and actually building a plant. And this is something I believe that we can do a lot more with in the future. But that was a typical acquirement in Prevas, where we completed our portfolio of competency to our customer. So Myra and the other integrated nodes in the systems are extremely good for us for the future. And another positive thing about the first quarter was that we leveraged our cooperation within Prevas. One example is that we're working together with different nodes. In this case, it's Stockholm, it's Västerås, it's Linköping, and it's Karlstad. And we're working with a major project for the defense industry that will have tens of thousands of engineering hours. So it's a massive project that we will run. And the reason that we can do that is that working together and utilizing the common strengths within Prevas, which we are doing now. Looking into the market, what do we think about the market? We strongly believe that the need for our core competences will increase over time. And what I talk about then is our ability to solve complex products, complex problems in different manners, putting together different competences and solving the really, really tricky questions. That is where Prevas has strength, and that demand will grow over time. I'm totally convinced. Then, of course, there will be some bumps. I was mentioning our customer base, and we are positioned in many areas where the global trends is supporting the demand. The energy transitions, the electrification, the automation, the digitalization, and sorry to say, the defense industry, we have a strong position there as well. That's growing. It's terrible that it's growing, but we take a part in doing our responsibility to support the defense industry as well. It's important for us, even more important now in this tragic situation with Ukraine and the war. And generally speaking, a conclusion is that we view the market as normal. Looking at the way forward, what do we see ahead? I think this is good because this rocket here shows a little bit my thinking about Prevas and the future. It's a little bit humble, isn't it? But we see that we will continue to go skyrocketing in Prevas, of course. But what we need to do in Prevas is to continue to navigate in this exciting world, to be flexible, to be quick, to be active in order to meet the different demands and transfer our resources to the areas where the demands are. So finally, I would put it like this. We continue to execute on our plans in order to be perceived as a premium company from the shareholder point of view, from the customer point of view, from the co-workers point of view, and from the society. That is ultimately our target, to be really perceived as a premium company. So that was a little bit about Prevas. Thank you.
Perfect. Thank you, Magnus. And it's nice to have you here, even though if you have not officially taken over from Johan.
Yeah. Trainee, yes.
Exactly. But Johan managed to take Prevas through quite a journey, as you showed here. Is there still things to improve? And if so, what will be your main priorities initially?
It's a lot to improve. It's always a lot to improve. It's not that we do something bad, but it's always a journey ahead of us. So I think we have an excellent platform built up, as I was saying, and based on that we will continue to grow because there's so much possibilities left to explore in the marketplace. And with this team that we have, I see no limits what we can achieve together then. So there is a lot to do.
And I get that you are not that worried about the macroeconomic picture, even though everyone is talking about an recession coming. But how about, I mean, one topic that usually emerges in the consulting space when you talk about the recession is that the customers get more cautious, maybe a bit more price awareness creeps in. How are you dealing with that, and are you seeing potential to keep raising prices now when wages come up?
I would put it like this, that many of our customers will continue to have large demands. What we see is that the orders we take now is even longer ahead in time than it was in the past. That is quite contradictory, isn't it? But that is what we see. We received orders for a fantastic project where we will actually develop a system, a safety system for a vehicle manufacturer that is years ahead. So we see that the order books is filling up over time. And that is not mainly, I would say, in short-term projects where you work on site as a customer. It's more of these complex solutions that we work together with our customers on a strategic level. That is where we see good order intake, I would say, as well.
And you also told us that you have a background in ABB and Sandvik, for example.
Yes.
Prevas also have a lot of customers in that space. When you visit your customers, how far would you say that they have come in terms of automation, digitalization, and how much is still to be done?
I would say it depends a lot. But what is common with all of our customers is that they urge and they see the need to improve. And even the ones that are extremely good, actually, it's contradictory. That the customers that I would say are in the forefront, they talk the most about how bad they are and how much they want to improve, because they are aware of the possibilities. So that's a fantastic part about automation and all of what we do, that it's so much left to do. Even if you are super, then you can be even better. So that means that the demand is more or less, over time, it will grow anyhow. Yes.
Perfect. And you also have a quite diverse exposure to different end markets, as we saw, which is good, as it limits the risk to certain segments. But is there any end markets where you see large potential and think that Prevas can do more than they do today?
I would say that we have many markets that we can grow. I mean, look into the market share that Prevas has today. It's not so large. We can grow in all of our different markets, I would say. But if I should say something, in the energy area, for example, where we see booming demands, and that will continue. And also about electrical power, how we support with those things. All of this connected to the energy transitions, there we see big needs as well. And that is one area. Short term, unfortunately, the defense industry will also grow a lot as well. And also the digitalization will continue as well, the mega trends. So I think we're well positioned for continued growth. based on the fantastic platform we have. Because now we have the structure to accelerate as we have the profit levels, as we have the customer base.
And the defense industry there, are you? I mean, I just suppose that they haven't done a lot of investments because we have, depressed investments into that segment for quite some time. Are they lagging far behind, would you say, in terms of what
no,
needs to be done?
I wouldn't say that they are lagging far behind, because they are good at what they are doing in their industry, but they have a good potential, if I put it that way.
Okay. Lastly, you do still have a strong balance sheet, and you have increasingly been active on acquiring new companies to the group. Will that continue to be a focus, and what are you primarily looking for?
Yes, we will continue to work both with organic growth and with M&A. Actually, I didn't mention that, but actually Johan, the former CEO, actually the CEO today, he will continue to work in the board of Prevas, so it will be a smooth transition, which is good. And he will also support with M&A from his board position as an assignment so that we maintain the pace in that area as well, even though I'm new. So that we, as a group, will actually be able to accelerate, even though I'm new. That's a good thing. So I don't know if that answered your question, but
of course, but
yes, we do. But we will be picky with our acquisitions, because it's humans we talk about, and in the consultancy industry, everything is about people, and you need to acquire companies that want to be a part of Prevas. Hostile takeovers is not a good thing in the consultancy industry, I would say that.
Do you find a lot of targets that you are evaluating?
Surprisingly, yes, I would say that.
Okay, perfect.
So it's a good market.
Yeah. By that, I would like to thank you, Magnus, for coming and presenting with us today, and for every one of you listening in.
Thank you.
Hello and welcome back to ABG Sundal Collier's Investor Day. My name is Hanna Forsgren and I work as an equity research analyst here at ABG. With me today I have Lennart Eberle, CEO at Rottneros. The stage is yours.
Thank you, Hanna, and hello everybody. Nice to meet you all again, and from hello possibilities to pure possibilities, as we like to say with Rottneros. And Rottneros is a almost pure play pulp producer for a long time. We have an almost 400-year history in the spot of forest industries. The foundation is back in the 1600s as an iron ore mill, and then through various investments and changes, we today are a pulp company with 2 mills in Sweden, one in Värmland and one north of Stockholm in Hälsingland. We have invested heavily in the late 2015-1800s, where we increased our capacity, utilization rates, as well as quality. And we have widened our scope in our business in 2020 by focusing on raw materials. We do not own any forest for ourselves, but we have increased our sourcing possibilities from private forest owners. 50% of the Swedish forests are in private ownership, and we have now a field organization in place. Since 2006, we already had first ventures into molded pulp or packaging, and that is a development that we have accelerated since the last years, and we are now in the process of increasing our capacity through a joint venture with our major shareholder, Arctic Paper in Poland. I will come back to that a little bit later. And we're also now continuing the journey of preparing ourselves for the future and to remain in place going forward. But if we have a quick glance at Rottneros and our operations today, at the top you see our 2 pulp mills. We make long fiber sulfate kraft pulp, which you usually would find in writing and copy paper, which is a segment which is of course declining, but also in packaging filters, which we make at Vallvik, 240,000 tons. We have the Rottneros mill, which is a mechanical pulp mill. So here 95% of the raw material, the wood we take in, becomes pulp. Only 5% is not becoming a sellable product. But on the other side, we have to use a lot of energy to drive the mill and free up the fibers. We used to have 2 lines here, and one was groundwood stone pulp, which is the most traditional way of making pulp, which was usually used in printing and writing and newspaper. And we closed down that line, and we're now in the process of increasing the CTMP production. That's mechanical pulp for example, carton board, liquid packaging board, milk cartons, which is of course a growing segment. Packaging has moved into a new premises a couple of years ago, and now we are ready with the validation of the technology that we are scaling up, and we have our forest operations. And all of these 4 legs together have created a turnover of close to 13 billion Swedish kroners, some 300 million euros. We were 320 employees, and we produced some 400,000 tons of pulp. As of yet, we do not separately account for our packaging operations, but that will come in due course when the Polish plant is up and running. So why should you be investing in Rottneros? Well, the forest industry as such is part of the green transition. It's a circular business model. We start with the forest, we take the carbon dioxide out of the atmosphere through the growing forest into our products, and we deliver it then to our customers. We have over the last decade proven a long-term profitability in our operations. We take care of our balance sheet, which is highly robust at this stage, which we feel is important. We create stable shareholder returns. And although we are a small player, we have a very strong position in selected niches where our pulps make contribution to our customers' products and services. Which leads me into the market. And if we look into what has happened on the end-use market for us. Let's have a glance at Europe. Europe is our largest market. Around about 67% of our sales stay in Europe. The market for market pulp, which is pulp producers supplying this market without using it themselves for paper and board production, is around about 65 million tons on a global basis. China is the largest market, the largest single market, but we have a long tradition in Europe, and especially with our niches, we are heavily exposed to the European market. But what we see here is the development that I've touched upon earlier, and the lower part of these bars is the printing and writing segment, which you can see has a structural decline. Digitization makes us using less printed material when we consume books and news, and instead we have a growing part in the board market. So the total European market is around 85 million tons, integrated and non-integrated, and the board segment is growing, and that is where our qualities make a difference. And then there are some other segments at the top, for example, tissue and others, which is also steadily growing. So this is the longer term perspective. This is why we've exited the stone groundwood line, why we are focusing on pulps for packaging, both brown and white and mechanical. If we look at the development during the first 2 months of this year, we can see, this is the year-over-year, we can see that the newsprint and graphical market had a tremendous slowdown, as you can see. And that's, again, due to the digitization that is going on. And a lot of this capacity actually is transferred to make packaging grades. So they're not closed, but they changed their focus. And the only segment last year that was growing was the tissue segment. So all in all, it was a 6% decline. If you then look at what happens on the pulp side, and here we can see the first 2 months, this statistics is lagging a little bit behind, but you see a major slowdown in Europe for the first 2 months versus 2022. The first 2 months is there. And we all know the reasons for that. Economical activity has gone down. We're in an environment with increased interest rates. Also, North America had a good start last year, but was slowing down this year. And the one that is not really in line with this is the development in China. In China, we had a very slow 2022, and now we see that that market is picking up. That's the second from the right, where you see a growth here at the beginning of this year. And being the largest market for pulp in the world, China, so to say, sets the tune for how prices are developing. If we look at our deliveries, I talked about that we are specialized niche producers. This is how our sales are distributed by segment from both pulp mills. And also here we follow the trend that we've seen in the European board and paper market, that board is the largest segment by now. Almost 1/3 of our sales is going into board, and this is both to non-integrated board mills, which are not making pulp themselves, but also to integrated pulp board mills, which are both making their own pulp, but for specialty products, they're using our grades or topping up a lack of pulp capacity. Filter, coffee filter is certainly known for most of us, but it's also oil filters and combustion engines or air filters is a segment which serves our fibers very well. There's a lot of porosity that we can supply, so you have the right properties at the filter paper. And also electrical applications, which is a niche and a speciality for our Vallvik mill, has grown quite tremendously over the last years, and here we are focusing and developing the right products to our customers. And then we have some other segments, and as you can see, the printing and writing is decreasing. This is the first quarter of 2023. We had some overhang from the stone groundwood, difficult word, which was sold off stock, and going forward, this segment will further decrease. And that's in line with our long-term strategy and in line with what's happening in the market, despite the fact that it hurts to, of course, close down part of your operations. A new segment that we've now started to list is fiber cement. So in the cement industry, you use all kinds of fibers. Asbestos probably is the most known, but most not environmentally friendly one, to reinforce the concrete construction. And you can also use fibers as a more sustainable solution. And it's quite a big market, which we see a growing demand for our pulps. If we go over to the Q1 results, fairly fresh off the press here at the middle of May. Looking at some highlights, we had a good start into the year, 149 million on the last row on EBIT. That was slightly up from 1 year ago, so it was a very stable and good result. Although we saw that pulp prices have started to come down, but they still are on a very good level. And we can also see that the change in product mix is contributing to our margins. After the quarter, we have continued investing in our operations, taking decisions. We have had a pre-project on the CTMP production. We used to make 80,000 tons a couple of years ago. Through the Agenda 500 project, we brought that up to 125. And now with this investment, we will increase to 165,000 tons. So we will sort of balance out some of the lost production from the groundwood line. That's a project that is started and that will be in place by the autumn of 2024. So there's a 1.5 year lead time. I talked about that we are energy intense. We have hedged our energy position successfully and are leveraging on that going forward, but we also will now start looking into how can we produce some renewable energy ourselves. And here the first step will be a 3 megawatt solar farm in combination with a battery storage. And that initially will be very advantageous when we're looking at how to help the Swedish Kraftnät to balance the frequency rate in the net. And there's quite a good payback on that coming forward. The top point there is referring to our Vallvik mill. We had to reduce our manning at Rottneros after the closure of that pulp line. We looked through our head office and staff functions at the same time last year. And now being in preparation of the downturn we see in the economy, we also have to review the organization at Vallvik without compromising capacity or quality. But that's simply a safeguard measure in order to be prepared of what might happen. If we're looking at the results for the first quarter, coming from last year, 145, I said 249 this year, slightly up. You see there is a large impact by price and currency. The Swedish krona has weakened towards the dollar, and year over year the prices had still improved. We have this mix improvement. Our qualities are the better selling ones. We closed down the lesser profitable ones. But what we see is also that variable costs have increased. That's chemicals, energy driven, but also the wood situation. Fiber cost has gone up, and there is a competition for fiber in Scandinavia, driven mostly maybe from the Ukrainian war that closed down the imports from Russia to Finland on wood. And by that, the Finnish paper and pulp producers had to look elsewhere, and that increased the competition in Sweden. But overall, on the last line, a stable result. We talk about prices a lot, and the pulp market is a cyclical market. Those of you who follow Rottneros are familiar with the top lines. Those are the list prices in Europe for long fiber pulp, both in dollars on the left axle and Swedish kronas on the right axle, the lighter line. But list price is only half part of the story. There's a gross price and there's a rebate, and there's a certain rebate inflation going on. So what we've started to report now are the net prices, which is of course more interesting to follow for the long fiber qualities. And as you would imagine, gross and net prices are following each other, but the gap is widening as there is a rebate inflation every year. That rebate, unfortunately, is increasing, driven by huge consumers of pulp. And if we look at what is driving the pulp, you here see also in the bars the stock values. We had a stock increase at the beginning of 2019, which was bringing prices down, as you could see the curve. And then we had a good demand at the end of 2020 and beginning of 2021. Stocks were down, prices went up to new historical highs, both in gross and net. And now we see that with the slowdown in the economy, stocks have started to increase again to those levels that we've seen back in 2019. And we have come down on the prices here since the peak in October. Nevertheless, if we put the Q1 of 2023 in perspective, it is a very good quarter that we have accumulated here over the last 4 years. And that gives us the confidence that we're doing the right things and how to prepare for the tough times that are going and that are coming. And most important for us here is, of course, our balance sheet and maintaining a solid position. So if we look at the graph first, we see the line, which is our equity over assets ratio. We have a financial target of minimum 50%. We have been above 60% for a long time and close to 66 at the end of last year, beginning of this year. You see the lighter bars that we have a net cash position and also the operational cash flows, which is the darker one. So if we would summarize that, we have an available liquidity at the end of Q1 of 860 million Swedish kronor, which is substantial for a company that has a turnover of 3 billion. And we will have a positive cash flow from our financial derivatives of 156 throughout the course of this year. We hedged our position for all the mechanical pulp production we believed we would have. We took the decision to close down one line. We were long on our futures. We sold those off and locked in the price very much at the peak of electricity pricing during Q4 last year. And this will generate a positive cash flow this year of 156. The annual shareholders meeting decided on a dividend of 214, which was paid out at the beginning of May. And those investments plus the maintenance capex is estimated this year to be some 300 million. So this is very much in the frame of our financial possibilities without jeopardizing anything and still preparing ourselves for the next upturn in the pulp cycle with more capacity at hand and a better position on the energy situation. So if we look briefly at what's going on, pulp is a product of the future. The population in the world is growing. There's more disposable income at hand. This will drive tissue. We have become used to using the internet to shop. We are shipping goods in boxes. The e-commerce is driving fiber consumption. Renewable energy means investments in transformators. Investment in transformators means you need more pulp to do the insulation in a transformator. The energy is going through copper. The copper is isolated by oil and to be cooled off. And then the outer steel frame is insulated through pulp. And we have one of the lowest conductive pulps. And then, of course, everything connected to sustainability. And here we see ourselves being part of that journey by having our molded pulp solutions. And that is what we're doing there. So we developed the technology. We think we are very far ahead in this run. And in order to spread the risk and find a good place to accelerate our capacity and production, we formed a joint venture together with Arctic Paper in Poland. And we're now, during the course of this year, in the means of increasing the capacity there substantially. So if we summarize that on what Rottneros is undergoing right now, we've broadened our scope. We have a strategy on how to source our raw materials by the acquisition of Nyquist. We are building up a third leg in packaging, and we're also maintaining a good position on our core business, the pulp, by investing in CTMP and energy. At the same time, we take the tough decisions that are needed to be cost conscious, closing down less profitable production lines which do not have the same future development on the sales side, and also always controlling our costs. And by that, we think we will maintain our competitiveness. We will do whatever we can to decrease our volatility, coming a little bit away from the pulp cyclicality, and attracting competence, which is, of course, one of the other big issues going forward for everybody in the Western Hemisphere. There is a fight for engineers and economists going on. So if we summarize all of that, stable results through Q1, a very strong balance sheet, which gives us the peace of mind to do the things which are necessary, and a continued transformation of Rottneros to continue to be a sustainable pulp producer, but more than that, be part of the bioeconomy and the circular economy. With that, I thank you for your listening and hand over back to Hanna.
Thank you very much, Lennart, for the presentation. So my first question will be, what will be Rottneros' main focus in 2023?
The main focus will be on delivering on our projects, kicking them off successfully, and finalizing the organizational review in order to make sure that we have our costs under control.
All right. So you decided to close down the roundwood pulp line in 2022, and you will invest in a new CTMP production line. Could you give some more color on the rationale behind these investment decisions, and also elaborate on the timing?
Well, if we start by the rationale, the groundwood pulp was mainly sold to newsprint, and newsprint, as we saw, is a very declining market. So given everything that we can see now going on in the market, we would have had empty order books since the end of last year, which would have cost us a lot of money. So it was really timing-wise the best time to do that. And it was a very old line. So from a maintenance perspective, it would have been difficult and expensive to keep up the standard. It was also very energy intense. It was consuming more energy per ton of pulp than the CTMP. CTMP, on the other side, mechanical pulp, is a growing segment, especially for packaging, liquid packaging and milk carton applications. We started it off by a board decision a couple of weeks ago, and this will have a lead time of 1.5 years. So we believe that we can push the button to have an increased capacity by autumn 2024.
All right. If we're about to picture Rottneros in 2030, how could it look? Will you have more direct packaging exposure by then?
There will be more direct packaging exposure in two ways. One is, of course, by the increased mechanical pulp and continued strategic focus from Vallvik with our NBSK for packaging grades, both white and brown. But of course also through Rottneros packaging. By then, the Polish plant will be fully utilized to some 100 millions, and I think we will see some other factories in the pipeline, if not already materialized by 2030.
So my last question will be, 2022 was a strong financial year for Rottneros in total. For 2023, the input costs remain high, despite some signs of easing, and pulp prices are plunging, especially in China. Could you elaborate on the market outlook and how you find Rottneros' position for the coming years?
I would reiterate our strong balance sheet that we've with us and that we're maintaining, and that we're doing everything we can to safeguard. And as we know, the pulp market is cyclical, and we never really know what's happening other than it goes up and it goes down. And there are a lot of things happening out there which are very difficult to predict. So we'll have to see where the bottom is and when it will turn around. But I'm sure that economical activity will return when people have confidence again that we've seen the top of the interest rate hikes, and there will be a life after tomorrow as well.
Thank you very much, Lennart.
Thank you.
And thank you, the audience.